Good morning, traders. Anthony Crudele here, and welcome to NinjaTrader Live. Here we are on June 30th, last day of the month, last day of the quarter. Should be a wild one on the close, you'd think. Typically, this is one of the slower end of the quarter, end of the month, just because it's June. Not a lot of people are around, but we'll see. Markets are busy this morning. We're going to talk a lot about what's happening, so stay tuned with us. Another jam-packed episode here on NinjaTrader Live. Joining me in studio, Senior Economist Tracy Shuchart. Good morning, Shai.
Good morning, all.
Senior Macro Strategist Craig Shapiro.
Good morning.
And the man on the big screen, Senior Market Strategist Jimmy Cagnina. Good morning, Jimmy.
Good morning, Naples. What a great quarter for stock index futures.
That it is. You know, and if we're going to take a look at what the quarter kind of was and potentially how we see it ending here all throughout the morning. Quick look at the tape, and then we'll get to the news with Shai. So far, equity indexes continuing off of that bounce yesterday, off of that morning sell-off, and then that bounce. They bounced right at the weekly open. It was pretty impressive on how they did that. I was watching it, and I'm like, if that low holds, they're going to just go all the way back up. I just should have just bought 50 NASDAQ and just walked away. But, you know, here we are. Again, they continue to fight the good fight. Markets or indexes are up small across the board. But up nonetheless. Crude oil's regained 70 at 71.20 this morning. Natty gas has got a little bit of a lift up over 2.25%. You know, metals, they're still struggling, but today they're doing okay. Copper continues to hold on to that $6 price area, which Shai and I talked about. I had the ETF. Shai actually bailed on mine last week because I was like, you know what, it got below $6. That was my risk. I mean, took a loss on it. It's just not doing much. We'll talk maybe more about copper today. Silver still sub 60, platinum 1600. Bond market took a little bit of a dip earlier. Maybe we'll let Craig talk about that when we get to him in a little bit. 10-year yield still sits just below 4.4%. We know Thursday is going to be the big day for that. And dollar is up modestly for everything against the currencies. And Bitcoin back to 59,000 in the futures. A lot to talk about this morning, but first, Shai, the news.
All right, so we'll get the Iran situation out of the way first. We do have crude up slightly this morning as Iran reiterated its determination to control the maritime traffic through the Strait of Hormuz, raising the stakes ahead of fresh talks in Qatar on formally ending its war with the U.S. Their deputy foreign minister was on state TV saying that if Iran will move forward on its own with plans to control the strait, if for any reason Oman is not interested in doing so, they will do that on their own. And they said, we have warned the Omanis and other countries they have no right to interfere in this matter. If you remember, you can either hug the Iranian waters, the Strait of Hormuz, or you can hug Oman's coast and be in their territorial waters. And that is where Iran does not want ships to go through, and that's where most of them have been going through. So keep an eye on that. We do have crude a little bit elevated on that. We have Citibank out this morning saying U.S. technology shares are at risk of further declines as overall investor exposure to the cohort is still elevated. The team led by David Chu said this month's retreat in tech-heavy NASDAQ 100 index had not been accompanied by a proportional reduction in positioning. NASDAQ longs remain significantly larger relative to shorts, with nearly 80% of long positions currently underwater. The risks are tilted towards loss-making longs, potentially exacerbating further downside pressure. So we have that out from Citibank. Then we have Japan. All right, so Japan all day long. Today, obviously, we have yields are rising. Their 30-year rate climbed 11 basis points to 3.94%, 20-year 9 basis points to 3.64%. This comes as the yen hit 162 overnight. That's the weakest level in 4 decades since 1986. And options are showing the yen's slide the yen slide to 162 earlier this month. Now they're all looking at 163. Everybody's wondering kind of when MOF will step in. And I flagged this because when you have a weak yen plus rising yields, and any kind of volatility spike is the exact cocktail that broke risk assets in early August 2024, if you remember. And that unwind cratered global risk in a matter of days. S&P was down 6% across 3 sessions. And so just something to keep an eye on. We have seen this combination in the past before. And I had to flag this because we did talk to Brent yesterday about the U.S. dollar. HSBC says that a sharp rise in the dollar may emerge as one of the biggest pain trades in the second half of this year. The bank expects the dollar to strengthen gradually through in H2 through the first half of 2027 and warns that the rally could become explosive if the Federal Reserve signals it's prepared to tighten policy more than markets have priced in, and if geopolitical tensions flare up again. They also noted that hedge funds have boosted bullish bets on the greenback to a 16-month high, a sign that investors are increasingly expecting further gains. They also flagged another pain is the reversal in the U.S. Treasury markets. We started this year expecting the yield curve to steepen because it looked like we were going to have 1 million rate cuts, but sticky inflation, resilient labor market, and a more hawkish Fed have flattened the curve instead. And just a reminder, end of quarter, end of H1. And new JPM collar today. We all get the culmination of the end of this month. And then as far as data is concerned, at 9 we do have FHFA, Housing Price Index, M&I, Chicago PMI at 9:45. At 10 we have Consumer Confidence, JOLTS, and then 10:30 a.m. Dallas Fed Services Activity. JOLTS is going to be our kind of first note of the labor market this week. Tomorrow, ADP. And then, of course, we have non-farm on Thursday because Friday is closed.
You know, it's funny. They did that non-farm. They moved it to Thursday. And then previously we had a non-farm on a morning where we weren't even going to be open. Remember, they opened for like an hour? They make up their mind here?
Yeah.
I'm so confused. Craig, let's talk about the quarter that was. Still time to go. It should be a little bit of fireworks at the end, but
yeah, I mean, it's been a huge quarter for equities. Although over the course of the last few weeks, we've definitely started to see an increase in that dispersion trade with the hyperscalers, Mag 7 names becoming more of a source of funds. And yesterday you saw it too. You saw kind of big flows into some of the AI, CapEx, non-memory names, more like the infrastructure plays and some of the equipment names like CLAC and ASML and couple AMAT. And so we see that rotation continues, right? We're seeing money kind of flow out of one name and the market cap goes up in several other names. And so, what we've seen though, of course, the last 3 weeks at least is Mondays are incredibly strong. It's like a resetting of positions, a resetting of call buying. The leverage ETFs come in, buy the close. It's an incredibly strong day. And then Tuesdays are violent reversal days because, it's like better to have traveled than to have arrived. The vol gets sold down. And then we have a reversal, and then the rest of the week is kind of is a flip a coin type situation. So it'll be interesting to see today, the fourth Tuesday, if that pattern repeats itself. But as Shai mentioned, flows are all back and forth today, right? You're going to have some window dressing for quarter end. You're going to have this collar trade at the end of the day, potential pension rebalances for sale in equities, the leverage ETF flows. I'm looking at the bond market today. You're seeing some kind of weird moves in this morning with a decent sell-off, over the course of the last hour or so on basically no news. I think not easy to take a lot of fundamental read out of the trading today. Probably just going to be a lot of whipsaw back and forth as people, look ahead to tomorrow where Warsh speaks. That'll be important to see. Does he reiterate some of that hawkish rhetoric from a couple weeks ago? And then Thursday's payroll is going to be, will help set the tone for the beginning of the third quarter, whether that dollar move accelerates as some brokers are looking for, or do we see a reversal there on a weak print? We'll see. But certainly in a holiday shortened week with volumes and people kind of heading for the beach for the 250th year celebration, it's hard to get too much of a read. I think the real trading for the quarter will start kind of next week.
Yeah, and someone like me who doesn't look at my long-term capital statement often, I'll look at it tomorrow, right? Where are we after Q2? Halfway through the year, as Shai said. So, it's going to be interesting to see what happens on the close today and into tomorrow, because I do think that, if you're managing loads of money, have you been positioned right for this? A lot of people are going to be, even though they're stepping back. So I expect a third quarter to be busier maybe than normal, just because I think that second quarter this year, I think, caught a lot of people off guard, and we'll see where we are, right? And unemployment on Thursday going to really set the tone for what this is going to look like. Jimmy, here's the thing: as you come out of Q2 and you look at, again, the quarter that was and what the new quarter could be. I mean, what's your thoughts technically? Like, what are the themes that have worked through this quarter that maybe we'll take a look at, start to maybe change or continue in Q3?
Yeah, when you look at the Q2 performance results for the Nasdaq, up 26%, Russell up 21%, S&P up 14%, Dow up 13%. It's important to note that these gains really ended June 3rd, and from June 3rd forward, we haven't really made any progress. As a matter of fact, we're below the June open on the S&P and the Nasdaq right now. Yeah, we're trying to fight our way back up to it right now, but we've really been kind of sideways if you think about it. Ever for the whole month of June, and so for a big majority of the quarter, we got no traction. So going into the summer trade, look out for the news bombs. But other than that, I expect some more sideways action here as this thing kind of tries to figure itself out.
Yeah, Jimmy, and when you look at what's really changed this quarter in terms of what I would say technicals, where the quarter shifted. Obviously, equities got extremely bullish. We know that. That's the captain obvious. But the metals, man, they continue to get sold, and gold sits just above 4,000. By every metric I look at, it's still the weakest market I see that I follow. And, you wonder, what does that look like into the end of the month, end of the quarter today? And is there any hope for them? Are they looking for Obi-Wan Kenobi right now? Or you're my only hope?
I don't know if there's any hope. I mean, if you anchor a VWAP from the beginning of the year in the gold market as an example, we're below the second standard deviation band of that and that's a rare kind of event right now. And 3,900 is in focus right now. We just can't get any traction to the upside.
I mean, Jimmy, I'll stay with you with oil as well. I mean, oil is down for the quarter. Now, we talk about the news all the time. Now, you can't sit back and tell me that a lot of people have been caught off guard on this. I mean, you would think maybe a flat oil market, but here we are. So basically energy and metals down for the quarter. Equity index is still very strong. Thoughts on oil?
Yeah, I mean, remember our yearly open in oil was $57.41. So we're still quite a ways above that right now. And again, when I anchored the VWAP differently here because we had a major event in the start of the war, and that's where I anchored my VWAP again below that second standard deviation band right now. It's surprising that crude oil is behaving this way. I mean, I'm bullish along with Shai and Craig. And it's consolidating at the bottom here. It's at a 71 handle right now. Every time we try to dip into the 60s, buyers push us back up just a little bit. But a series of baby candles. We have really small daily candles now in the aftermath of all this nonsense that went on.
Yeah, Shai, let's go to you. What's the fundamental story coming out of Q2 across the board? You heard us talk about what equity indexes are. We know that they're steadily rallying. And across the board, the rotations, I think, are bullish. Metals weak, energy weak. What's the fundamental story?
So, I think that, let's start. They're each individually different if we're looking at the commodity world. Copper is very closely tied to that AI CapEx story. So when we saw a pullback this month in those names, we also saw a pullback in copper. And now that we have seen sort of a rebound in those names, we have and related names, data center build-out names, that we have seen a nice rebound in the copper market. So if you are trading copper, know that it is very closely tied to that trade. In fact, if you put a NASDAQ chart up and compare it with a copper chart, it looks very, very similar. So that's,
and it is the only metal up for the quarter that I see right now.
Right.
Platinum's pretty flat, but
Platinum's pretty flat. Silver, silver's kind of caught between the AI CapEx story and being an industrial metal, and we need a lot of silver for that. But also a monetary metal, so it's closely tied to gold as well. So it kind of goes back and forth. Its personality goes back and forth between kind of the rate story versus the AI CapEx story. And of course, gold absolutely tied to rates. Gold shut up when we were going to have 1 million cuts this year. As soon as that started to look like that wasn't going to happen, then we got to pull back in gold prices. And I think it's going to struggle until kind of that narrative changes and we sort of start to price out some of these rate hike expectations. And then I think you'll be able to see gold kind of catch a bid on that. And as far as crude oil is concerned, it is also tied to 10-year yields. We have seen a pullback in 10-year yields. That has kept pressure on crude oil markets as well. But of course, the story is everybody wants to look beyond. Everyone wants to say this MOU is it. We've got a peace deal. We're all good. Everything's going back to normal. And just like the equity markets looked at that as well. And so I still think that fundamental story is going to rear its ugly head later this summer.
So, Craig, we heard the technical backdrop of Q2, the fundamental backdrop. Equities continue to rise across the board. The rotations, some people may call them bearish. I don't. I think that the rotations are healthy. I think you have as strong of a stock market as I've seen in some time. Metals, energy still remain weaker. We know we have to close out today, but I think today is going to be, for all the traders out there, probably a tougher day because it's less technicals, because whatever's happened in the quarter has kind of happened. Maybe there's some little bit of fireworks on the close. But where do you see the trends continuing and potentially changing?
Yeah, look, I'm just thinking kind of as listening to this conversation and think about what's the trend for the next quarter. What looks good right now? The dollar. The dollar looks good to me. DXY is making kind of 13-month highs here, breaking out technically above all moving averages. Dollar yen's breaking out to 30+ year, 40-year highs. Dollar euro. U.S. relative outperformance trade, right? The U.S. economy has been relatively impervious to the issues in the war, the higher energy prices. Now those are dissipating because of the AI CapEx story. And so you're getting those flows back here, and the U.S. economy has been strong. It means that the U.S. central bank is probably going to be more hawkish than the rest of the central banks. So you have kind of a growth differential that favors dollars. You have a rates differential that favors dollars, provided that, and you have a central banker, I think, who's looking to, think about redistributing gains in the economy away from Wall Street back to Main Street. And in order to do that, he wants to, think about slaying inflation. Now, are they going to raise rates, 2-3 times? I don't think so. But by keeping the pressure on the bond market and saying, we're serious about this, what he could do and what he has done, even over the course of the last couple of weeks, is we've seen that curve flatten, right? We've seen front-end yields kind of move higher. That helps the front-end yields moving higher. That's where the funding goes for the AI CapEx trade and the financial markets. But long-end yields coming down. That helps the consumer, right? Mortgage rates don't break out to the upside. So a curve flattener actually is something that I think the administration would like to see. And I think that's what Warsh is thinking about delivering. But that's dollar bullish. And so I think as big funds are thinking about their setups for the next quarter and into the back half of the year, we're going to be dealing with more of the dollar wrecking ball type dynamics here. What does that mean for stocks? We'll see. I think different things work in strong dollar tapes than in weak dollar tapes. But I think that is the big thematic. And so I think that jives well with why metals look weak, why oil looks weak, why commodities look weak. That dollar part of it, I think, is in that narrative for sure.
I agree with you. I think that is the strongest market coming out of the quarter. That is the strongest trend coming out of the quarter, and that's something to take note. And that's why we'll talk about this more over the next 24 or 48 hours. Again, getting through an unemployment on Thursday really sets the tone. Go into a long weekend, then everyone starts repositioning as we get back from the 4th of July weekend. And I talk about this why. I know that our audience is way more super short term, right? But what we're trying to provide here is just an understanding of the bigger picture trends and how you can become a better executor of your strategy. It's funny, we were just in London and I was talking about this with a lot of the traders there. And we're going to have a little video for you tomorrow, by the way, too, to let you see what that was like. But it was just fantastic talking with a lot of traders out there. Also in chat, if you were there in London, let me know. I know we had several of them there, which was pretty cool. And one of the things that I talked about with a lot of them was just, look, you have this funnel, right, where you have all of these traders come in at once, right? And everyone talks about how many of them, 95% of traders fail or whatever the number is that everyone talks about. And we know that's a great number, right? And what happens is most of them get lost in the mix at the beginning, right? They come in, they open an account, they get ready, they get focused on the super short-term strategies, and they get even shorter term, and they feel like they have to do something every day. They don't expand time out. They don't last long enough down the funnel, per se, to be able to actually exist long enough as a trader. And my message to all of them is always, give yourself time, understand. And in order to become a long-term successful trader, you have to last a period of time. You have to understand that there's different market environments. And when you get down to the short-term execution, it's important to understand what these big picture trends are, because it helps you position, in my opinion, even on the short term, on the side of the market where these bigger picture trends are, where these bigger flows are. And so when you come out of a quarter, I think it's good perspective. Number one, see what you've done, look at what you've done through your journaling, understand what the markets have done over the past quarter, and then compare it to what the big picture trends are. One of the things I used to look at way back when was, wow, I continue to try and sell a market that kept going up, and I just kept fighting it, right? And you looked at it and go, why is this happening to me? Well, it's because I didn't understand the bigger picture trend. Even though it was super short term, I'm like, well, I got a lot of short signals last quarter. Yeah, no shit, dummy. Right? Why did I get them? I get them because every time we go to test resistance, I'm the first one in. And so then you start to slow things down and you're like, hey, let me understand how to trade this better. And the same thing goes for what we're trying to do here. We're trying to give you perspective into the bigger picture trends. So when you get down to the shorter term stuff, you understand where the fundamentals are, where the macro picture is, where the big primary trends are. And as we close out this quarter, think about what was, and then as things start to set up, start to get yourself better positioned in during the day where these bigger picture trends are. We only have 1:20 left, but I want to talk about that. I know we're going to get to Jimmy for the Edge Report. I'm going to go Shai 30 seconds and Craig 30 seconds. Shai, again, coming into the end of the month, end of the quarter today, what is maybe one thing that you're going to look at to see how the market closes out the quarter that you think maybe there could be some fireworks, repositioning type stuff towards the end of the quarter? Yeah.
Well, I think what would be really interesting is that, we had that rebalance that we talked about, 165 billion. It's the last day. I'm sure most of that is done. So we did have a lot of buying pressure for the bond market and selling pressure for the equity markets because they were selling equities and buying bonds. And so we could see a little bit of a reversal of that today and into the next quarter.
I like that. Final word to you, Craig.
Yeah, look, we get jolts today. It's the next labor data print, and there's expectations for strong data for the labor market for the rest of the week. But for today, expect the volatility, expect the leverage ETF rebalance flows to be an important driver. Expect all this, and don't necessarily get too much of a read from how we close today as if that's going to signal anything for the rest of the quarter. I think tomorrow it starts a new quarter, it's a new day, new flows, and then Warsh kicks us off at 9 a.m. It's going to be a big, it's going to be an important day tomorrow. Today's kind of a little bit of a crapshoot.
Yeah, it really is. I mean, I remember a time where the end of the month, end of the quarters were my bread and butter, just because there was that end of the month, end of the quarter close where if we started going in a direction, I kind of just hopped on and kind of ran with it. You get so much back and forth. Don't get yourself chopped up, everybody, at the end of the month, end of the quarter on a day like today. Watch, learn. Again, stay in the game. The more you learn during these times, the better you're going to be for the next end of the quarter, the next end of the month, and you understand how your strategy reacted during these times. So, again, we'll talk more about that this morning and throughout the day. But it is about that time, everybody, for this morning's Edge Report. Take it away, Jim.
All right, well, let's talk about Dr. Copper. I have a daily candle chart up here right now. Not a lot of stuff on it, except at the bottom. We have some correlations, and this is what Tracy was talking about earlier this morning here. This is the correlation between the NASDAQ and copper futures right now. And you can see I have two different calculations. I have an eight period calculation for correlation and a 21 period. And they're both highly positive. Right now, we're tracking 78%, plus 78% on the 8 period, and 56% positive on the 21 period. Very rarely has it gone negative on this chart. So again, this is a really good graphical representation of shows how that correlation is kind of played out and changes over time. You know, it does have a mind of its own sometimes, Dr. Copper, but still, it's highly, highly correlated. Let's take a look at a daily candle chart with some lines on it. It seems like there is kind of a weird kind of trend channel down. You know, we have a swing high, a lower swing high, and then a swing low and a lower swing low. Now we're bumping up against the top of that channel right now. So we'll see what happens. We're also above that, touching that first, that first standard deviation VWAP band from the beginning of the year. So it's going to be an interesting level. We are above that $6. The other thing to note is every time we get to that $6, and we'll see it more in the next chart, is literally buyers come back in. So that's kind of constructive, being above $6. Didn't get to my $7 target yet, but we do have $6.71 is the ultimate kind of swing high here, almost a double top we see on this chart as well. RSI is kind of swinging up pretty nicely as well, which is good. Intraday, let's pop this intraday chart up really quickly here. You know, it's a capital P-shaped volume profile right now. Let me get my mouse in the right spot here. And literally that point of control is toward the top here. And you can see a nice value area up there. Point of control 6.24. We did wick through that daily max, that Menthol Q daily max, but really the number to keep your eye on is that 0 DTE call resistance up here at 6.30. That's kind of defining an upper target. If we do break out above that London initial balance high in R2, which is 6.285. And again, we'll keep an eye on the NASDAQ at the same time. On the downside, really, there's that previous session's lows down here I'm going to keep my eye on, as well as that S1 level down at 6.12. That's a long way away. We've been, we lost VWAP in the rearview mirror a long time ago for the session, and this market's being priced nicely to the top side right now. So I'm a little bit bullish here as well. Let's shoot over to the NASDAQ. The NASDAQ is also interesting. Let's pop open a daily chart. First and foremost here, again, there's some statistics on where we're at on the quarter, but we're literally getting, again, close to that upper standard deviation band for that VWAP here. This VWAP is this is the wartime, not even, this is these peak lows. This is at the end of March. Drew that, painted that line on there. We're well above it right now. Buyers in control, but we're still below that June open, right? The June open's 34.15.5. It's within striking range today if we catch a bid, but right now we have a little baby candle on the daily. Not a lot of stuff happening yet. It's been sleepy overnight here for the stock index futures. And then intraday, we do have some targets though, folks. We have that JAX 1 level, which is right at 30,300. Above that, should we catch a bid again, 30,500 is that 0 DTE call resistance. Sometimes it acts like a magnet. Keep your eye on that. It's pretty closely aligned to that Menthol Q one-day max as well on the upside. On the downside, my big level here is this high vol level down here, this purple line here, and that's at 820. It's a weird number, I know, but 29,820 is where that high vol sits. You got the 0 DTE high vol level also a little bit higher at 29,900. So these are kind of really important areas on the downside if we can get some downside momentum. Below that one-day min's pretty far south, folks. Keep in mind, 29,578. Now, we've only been at 42% of the 34-day average range, so there's room to grow up or down. So be careful, have your stops in, and good luck today. That is this morning's Edge Report. Back to you, Deli and Shai.
Thanks, Jimmy. Shai, preview of our guest.
So we have Jen Shaigec, and she is CEO of Sandpiper Trading Corporation. She's going to talk to us about metals markets. She's done a lot of research in metals markets, oil markets. So we'll get some clues on the markets from her and see what she thinks.
Yeah, perfect timing. Timing's everything, as they say. All right, let's speak about the rest of the timing for today. Let's take a look at who else will be on NinjaTrader Live this morning. Of course, we've got Jen coming up. Going to pick her brain about metals and energy and see where she thinks they are end of the quarter, into the new quarter. We've got Tuesdays with T, Tape Talk with TTrades. We've got Trade the Open with Merritt and Christian. We've got Midday Markets with Jack and Stowe. And then look at this trade that closed today. We've got Tanya, Kane, Leo, and Selma. Listen, that's going to be something to watch for them at the end of the day. Going to be some market talk, but there's going to be a lot of laughs.
Yes,
a lot of
sure.
fun. Make sure you tune in for that. All right, let's bring in Jen. Jen, good morning.
Good morning. Thanks for having me. How are you?
Doing great.
Early
and
here.
yeah, excited to have you here. It's a perfect day for you because as we come out of the end of the quarter, we talk about what's in favor, what's out of favor, right? When we just all step back, look at everything. We look at our performance, we look at markets performance, and here we are, equity indexes trending back up near all-time highs, a lot of rotations throughout the quarter, a lot of question marks on whether or not this was going to continue to happen here in the equity index as they continue to push forward. And two trends that I think probably caught people off guard, maybe, just maybe. Metals continue to trend lower. Here we are, gold near the lowest it's been in some time, and oil, energy markets near the lows of the quarter. Thoughts on that?
Energy markets, that's a lengthy discussion. I think Tracy's probably heard me speak before about potential conflict with China. And typically governments do suppress energy prices before a major conflict. And so I tend to think that there might be something behind that. If you've heard of the Davidson window before, 2027 timeframe in military circles for conflict with China. And I see us kind of edging towards that. But in metals, it's a really complex landscape right now in metals markets. You've got the geopolitical tensions and resource nationalism, and then strategic government investments, and everything is really fundamentally altering that landscape. And then cost inflation has reset the long-term incentive price higher for both copper and gold. And I think that, this war hedge premium that's been priced in is really being reinforced with every fragile ceasefire agreement. So copper in particular has been difficult, but I think that, Anthony kind of gave me a nice lead in there. Thank you, Anthony, when you're talking about looking at the long-term picture, because one thing that I don't hear people often discuss is the seasonality in metals. And both copper and gold tend to sell off in the March to kind of July timeframe. And then in this case, in March, it was a little bit exacerbated with the, war in Iran began, I think it was February 28th. And so, seasonal sell-off, like I said, was exacerbated. So I'm thinking that we'll see metals or gold in particular come back in a little bit. One of the things I wanted to talk about was the middle corridor. I think that is another thing that people really aren't factoring into the conversation that is hugely important, is shifting trade routes and how that will impact metals as well. So if you're looking at equities, I personally like the thought of looking at domestic U.S. plays for copper in particular. And I think we're going to see a revival of historic mining districts that people don't necessarily have on their radar yet, like Montana and the Carolinas for copper plays in particular.
Well, excellent. I like that. I have a couple copper plays in the U.S. that haven't done anything. So, but we did. Well, let's talk about. I know that you had something flagged on your X account, like your pinned tweet, talking about the Caspian trade route. And so tell us a little bit about that and what you're seeing there, and how does that affect the markets, particularly oil?
So the middle corridor is a key component of Europe's global gateway strategy and also China's Belt and Road Initiative. So it's an overland trade route, and it goes through the Caspian Sea as well, but China to Europe, and then it avoids those choke points of Strait of Hormuz, and then going over Russia. So the thing is, I think when, Anthony, you're saying about zooming out and looking at the longer term, I think this has actually been something that's been underway for a few decades. And in as far as oil is concerned, in 1994, there was this international consortium of oil companies that signed what they called the contract of the century in the Caspian Sea. And then production started there in 1997. 1998, the U.S. State Department estimated that reserves in the Caspian Sea were about 200 billion barrels. So I think to give you an idea, compared to Saudi Arabia oil fields, what was it? I wrote it down. I wanted to give you that stat because it was 80 billion in Saudi Arabia. So estimates vary, but I think that untapped potential in the Caspian is just enormous. And a lot of, I think what we're seeing, conflicts with Ukraine and Iran actually relate to that because China has been building this Belt and Road Initiative partnered with Europe since about 2014. And I think we're going to see this shifting trade route that will really impact all of that.
Interesting. And so let's go back to gold for a little bit. Obviously, we had that parabolic move. It's come down a lot. I know that people are everybody I know is long-term bullish on that market, but what kind of levels are you looking at? And then also maybe talk a little bit about the miners, because I'm surprised, even at $4,000, I mean, their margins are ridiculous, but yet, they pulled back a lot as well.
As far as gold is concerned, and like I was talking about, when this has been something that's been going on for decades. So for me, when I look at the central banks buying, they really reverse course around the time of the GFC. So gold, they've been net sellers of gold for decades. And then once the GFC happened, I think the US debt became structural and sort of the writing was on the wall at that point. And so central banks started buying gold. And I think one thing people need to look at, not just that central banks are buying, but who is buying. And it's been Poland, but also one of the largest buyers has been the state oil fund in Azerbaijan. They've actually bought more than China. And Turkey, Kazakhstan, and it's really all along that middle corridor. And so gold is kind of this insurance against geopolitical risk. And so if you look at that region right along there, I think that is why it's been those central banks in particular. There's rumors now that it's been for a little bit that Russia might move on Poland. And like I said, Poland has been one of the biggest buyers. So I think that's really an area to watch. And then gold actually, Azerbaijan, that state oil fund, actually sold for the first time since 2012. In April, I think they sold over 3 billion worth of gold, and they hadn't done that in a very long time. So I think that's important to watch what the central banks are doing. Just to give you an indication of long-term picture for gold is I'm going to be following a lot what the central banks are doing. And then as far as miners, you're kind of asking the wrong person in a way, because I focus mostly on exploration companies. So as I was saying about domestic U.S. plays, I think they'll be very important going forward. I don't really want to touch too much on large caps. I'll leave that to Rick Roll.
So Jen, I want to talk about coming out of the quarter into the new quarter, and for those that maybe aren't looking at some markets that have underperformed this quarter, what should they start to be looking at? We talk about gold. Obviously, gold is near the bottom. We talked about copper, oil. You talk about sometimes prices get depressed before something is happening. When do we start looking at these? I mean, we talked about seasonality as well. When we get into a new quarter, Q3, everyone's going to sit back and look and go, why were we positioned this way? Where are we wrong? But where are the new opportunities? Where do you see the real new opportunities for next quarter?
I think you have to buy what's hated. And so I'm watching nickel closely as well. I think that we could see some issues in the South China Sea, and there'll be shipping issues likely with Indonesia. Indonesia has started to nationalize some of its commodity production. So I think that we should be watching nickel. I'd be probably a buyer of nickel at these levels. And then aluminum will be one to watch as well. Guinea is one of the world's largest producers of bauxite, and need bauxite to make aluminum. And so they've just imposed export restrictions on bauxite. And the U.S. is really short of smelting capacity for aluminum. So that's one to watch as well.
Nickel and aluminum. Do we have futures on those, Shai? I've never traded those.
Yes, we do.
Wow. We've only got a few minutes left, Shai. Final question for you.
What are your thoughts on maybe some of the other metals like silver? I mean, it seems that because I'm a big fan of silver, we still use a lot of industrial purposes. We still need that for that data center build out, but it's kind of not really reacting as well as copper to that story.
So silver has seasonality to it as well. One of the things that I focus on quite a bit is central bank digital currencies. It's very interesting, actually. I look at the Office of the Historian quite a bit. I'm a nerd on a Friday night. I love that. So I'll read conversations back in the time of Nixon and Kissinger. And in 1975, there was a memo that was written from the Secretary of State for Economic and Business Affairs. And this was after Nixon had closed the gold window, but he said Europeans are going to be tempted to set up a new gold-based currency bloc. And European Central Bank was created in 1988. And that's really where I see us heading when I look at things from Bank for International Settlements or pilot projects for CBDCs, et cetera. But I really think that we're going to be headed for a bimetallic-backed CBDC, not just gold-backed. There's a lot of history there that would indicate that. Somebody at the IMF is working in Shanghai, and he's written several papers on bimetallism. And so I think silver as a monetary metal has really not been priced in yet. And I think you're going to see a dramatic move when that happens.
Well, we have time for one more. I want to hear your thoughts on everything that you see in the commodity space. How much of that do you think is going to impact stock market, AI trade? Because obviously these prices right now have come down, and in so many ways we talk about, copper, silver, all these things and how they're tied to the AI trade, and maybe lower prices are helping the AI trade. But if they start to get alive again, what happens? So I'm just curious, from your perspective, from the commodity side, metal side, energy side, if these things do start to happen, where do you expect impacts on the stock market?
That's a really tough question. I don't even want to answer. Like I was saying, it's just such a complex environment right now, and I hate to sound apocalyptic and like a doomer, but honestly, when I read Bank for International Settlements, IMF, everything that they're progressing with, and then obviously I don't follow tech stocks, Bitcoin that closely, but I think they're overvalued, and AI has not proven itself yet. And I think that's going to be the larger factor. And then as far as commodities, it's going to be all about these trade routes and reshoring. And that's why I think it's almost more important that you consider jurisdiction more than anything.
We'll end there, Jen. Thank you so much. Great meeting you. Thank you so much for joining us here on NinjaTrader Live.
Thank you.
Appreciate it. Thanks. Have a good day.
Go check out what Jen is doing on X, everybody. That will be in the chat. Shai, when I think about what the quarter was and what it could be next quarter, it's interesting because when you look at silver coming back down, when you look at copper, which really hasn't come back down, copper's still up for the quarter. But when you look at the metals that are tied to the AI trade, are they actually helping the fact that AI stocks are in play by them getting weaker?
Well, I'm not. I would push back on that a little bit, only in the sense that, these data centers are going to get built no matter what. They don't care what the cost is. So I don't know if it affects, having a weaker silver makes
That more money.
that right for,
Yeah.
what I'm saying, for a company that it would really matter. But, I'm sure it does not hurt their bottom line, obviously,
Yeah.
by any stretch of the imagination.
I guess I think about it from the demand scenario. Like when everyone was chasing silver higher, it was, look, it's a utility metal and you could put it in your pocket and whatever. If you're going to have really, tightly sewn pockets to hold some silver, it's pretty heavy. And again, copper, same thing. When they're chasing them higher, it seems like, oh, that's bullish because the demand's there. And when they come down, it's still bullish for AI. It just feels like everything is bullish for AI.
Everything's bullish AI.
Bullish, yeah. All right. Well, we'll have this discussion continuing into the new quarter. But Shai, we'll see you in chat. Thank you.
All right, thanks.
All right. Let's bring in T. What's up, homie?
Not much. I'm a bit sick, if you can tell by my voice.
Come on, man. If I get sick from being on this episode with you, I'm going to be pissed. There's, I know it's not contagious, but still.
Yeah, you might get it through the screen, Deli.
Yeah, I don't like. Anyway, all right, we'll dive right into it then. Remember, everybody, every Tuesday is with T's Trades. We like to call it Tuesdays with T. And this segment is brought to you by CME Group, where T and I dig into the tape and we go really outside the indexes. We give a look really across the board. And T, end of the month, end of the quarter, perfect time for you to be here. We've talked about this morning a lot of what was and what could be in the new quarter, and I gave my reasons as to why I think it's important to look at that even for short-term day traders. Let's take a look at your charts. Let's talk about what the quarters have been and what you potentially will be looking for into the new quarter starting tomorrow.
What do you want to start with?
You pick it.
All right, we'll just start with indices. So, like Deli said, we have start of a new quarter, new month, right? And so a lot of times I like to let those close and then make decisions, right? And so basically with the quarter, you can kind of assume where it's going to close. But with this, right, we have a nice bullish candle on the indices. The way I look at this is I mark out 50% of it and I mark out the high, and those are the only areas that I'm looking for. So I'm either looking for this month to make a small wick and then continue higher, or take out the high and then I can look at the reaction if we fall back into the range or if we're going to break out to the upside. So what does that look like, on the monthly? Well, we have previous month's high and previous month's low, and so that's how you can narrow that down because it's kind of in the same area. So, if you look at previous month's high, previous month's low, then you go to the daily chart. We're just in this consolidation, which you could have seen from the daily chart. And so with this, can you trade inside this consolidation? Sure, but it kind of throws it back to, last year, November or so for me. If we zoom back out, we have this big messy consolidation. And sure, you can trade inside of that, but it's a lot easier once we take out one side of the range. And so I'm kind of in that same opinion right now currently, where I'm just looking to see this, be a range trade. So are we going to go to the highs first? Are we going to go to the lows first? And then what is the reaction at those points of interest? Currently for this week, it's a bit weak. It looks at a consolidation to me. So I'm just kind of looking for it to range like that, maybe return back to its weekly open. I don't have too much currently. Probably going to wait for, next week to really let non-farm payroll as well as some more data print.
Yeah, when you look at that chart, the one thing that stands out to me, and I talked about this yesterday and even this morning, opening range for the Sunday night open is the low. We went back down, tagged it yesterday during the day and bounced off of it. And again, I think when you look at coming into the next session, today's session is going to be a tough session, everybody. Let's be honest, okay? Today's session, you just look at this chart and where we are end of the quarter. Nothing that happens here today is going to make a significant impact on the quarter's performance. So there's that. So you're going to have a lot of back and forth, ebb and flow. So just be cautious of it. When we get into the next quarter, I think that's where I want to see what you think about. Where does the quarter turn really bullish for you? Does it have to make a new high? What are you going to be looking for into a new quarter? Because we won't have you here tomorrow morning.
For into a new quarter, it's kind of hard for me to do too much inside this range. To be bullish, I'd want to see some sort of reaction at this low or take out this high and then continue above that. So, if we go back to, something like the previous quarter. What do? We run out range lows, reaction there, we get a trend. When we break above these highs, we don't, get a reversal. We just continue to trend. So kind of the same idea as, the previous, November, December, all the way up until to now. That's kind of what I'm looking for. So, there'll be intraday trades inside of this area, when we have set up swing points. But in terms of a longer term perspective, I'm just looking for one side of the range. I'm not as good at trading inside the middle of the range. That's not where I do well.
Yeah, I think it's a point to make to everybody when you are coming out of that new quarterly candle. Again, today we know what we've discussed. It could be a little bit of a choppy day, but when you get into tomorrow and then into Thursday, which is unemployment, let the quarter set up a little bit. And we talked about this, the importance of this earlier in this morning segment, is understanding where these primary trends are. If they're continuing, that helps you position more on that side of the market, even on a very short-term basis. I'd like to dig a little bit deeper into the other indexes because there has been rotation the last month or so. I mean, you really look at what June has been. Let's talk about that.
YM small caps got a lot stronger. They've continued this trend. It's been a bit choppy, but it's been the strongest asset between all of them. YM's currently weakest on this higher time frame. YM strongest. ES is just in that middle. But that doesn't mean for intraday that it remains the same, right? So, but for the other indices, kind of the same idea. For this week at least, we've ran out this high, but we haven't ran out that high on NASDAQ, right? So if we form a reversal here, we could go back towards that weekly open. There's just really not a lot to go on right here. When we're trending like this, it's really easy. You just wake up and buy. Here, it's just not so straightforward. Kind of the same thing, just looking at the range high and range low. I don't like to get chopped up. So on a higher time frame perspective, that's what I'd wait for.
Yeah, and I talked about this yesterday with Selma and Tanya on how the ES has really just been, it feels the ebbs and flows of everything. And we used to talk about this a lot in the pit. It was kind of a joke. We used to say the S&P is the center of the universe for a lot of reasons. I mean, a lot of egos in there too, though, T. But nonetheless, it's just it's a market that has no real ties to the Russell. Of course, it has ties to the NASDAQ and Dow, and it feels that ebb and flow. But when you get a lot of rotations, if you're an ES trader, everybody, you got to understand that the S&P feels that, and it gets real choppy short term. We've seen that. Let's take a look at the Russell, because the Russell and the NASDAQ to me are becoming the two markets. Dare I say, like the RTY is like inching its way into the ES day traders, where I see a lot more of them trading it. It's just because it trends more, and I think it's become in play, as we call it. I'm curious what you see in an RTY.
Yeah, I don't personally watch RTY much. If I was going to, I would just use YM, the Dow, to watch it with it, because they have a pretty good correlation versus if you compare it with ES or NQ. Not really that correlated. But I mean, yeah, it does have some nicer trends when it does trend. And, we have made a bullish candle here on the month compared to the other indices. It's just not something I personally look to watch. Still, right in here, there's not a whole lot going on. But if we were to watch this from a higher time frame perspective, I would just be focusing on this previous month's high, and then also watching YM previous month's high for the new quarter, the new month. Do we get a reaction around this level to frame something, or what are we doing? Really, the indices, it's just kind of choppy, and I don't know if we're just gonna have a choppy summer, but it's nothing too interesting there. I think gold and some other things are a little bit more interesting right now.
Let's go to gold.
Sweet. So gold, right? We can zoom out here a little bit to the monthly, right? You can see we have a nice big monthly candle, and now we're into this gap here. So this is where we could potentially get a reaction here, right? If we're going to get a turning point, this is where I'd be looking for it on this higher time frame. Now, what do I look for? Well, I would want to see a previous month's low sweep, or, a sweep on silver and not on gold, something like that. And so going down to the daily now, that's just going to be, I kind of have two options here on gold, right? So we sweep out this low to get a reaction to go higher, start of the new month, or we're just going to go up here, close above this level, and then we can trade higher. I'm wanting to remain bullish on gold just because, I like to look long below lows and short above highs. And, we're taking out all these lows from everyone, early last year. beginning of this year when we had that big gold craze. And so that's where I want to start looking long, not trying to flip short. So that's really what I'm looking for in gold, silver, is can we form a reaction off this previous month's low? And if so, can we trade it to the upside or not? And that's very similar to the exact thing we did, right here when we were talking on this Tuesday. So
I like that look in gold too, T, because if they flush them out a little bit here, whether it's today or the next couple of days, and they get back into that range and you start to move higher in gold, keep an eye on that monthly candle to start, everybody, that quarterly candle, and watch how these next couple of days shake out, especially when a non-farm payroll's on a Thursday, typically a decent mover for gold. So much of that's tied to the dollar and interest rates. Keep an eye there. Again, you can get some look at what these trends could be, again, with some strong continuation of lower or a reversal, and there could be some good intraday moves to catch there. I know that, we're probably going to go to silver next, but I do want you to touch on copper too.
okay, yeah, we can take a look at copper really quick. I think it's the strongest one, yeah. So
Yeah, it is. It's the only one up
copper's
for
a
the
lot
quarter.
stronger compared to all the previous, right? And how do we know this? Well, let's just go out to the monthly. Gold was taking out, these previous months' lows over here, right? If we go back to gold here, you see how it's taking out all those previous months' lows. Here on copper, we're way up here. So you can just tell that it's stronger based off the fact that it's not, taking out those lows, it's putting in a higher low. And so for copper, if it's going to remain bullish, as you can see on the screen here, we just have this range, right? And so now that we've taken out the low in the range, that is where it becomes favorable for me to look long, right? I don't like to trade within the range. I like to wait for the range to get taken out and then see if we can get a move higher. So I think if we are going to get some sort of bullish move, then we do have copper setting up for a run into new highs here. And then, if we have that monthly candle, how far can it go in 4 weeks?
Yeah, when you look at relative strength amongst the metals, copper is the only one that's up for the quarter. Platinum is a little flat to maybe down a little bit. Silver and gold have been out of favor. I know many people don't trade copper, but when copper starts to trend, everybody, it's a pretty good market. Remember, there's micros for it too, because the big contracts can be pretty pricey. You get auto linked
What's
pretty quickly
what's
if
the
you're wrong
macros
there.
for that? For people in
I
chat?
don't know the symbol off the top of my hand. I don't know.
Right.
Somebody in there could put it in there.
Yeah, maybe someone can.
I've never traded a micro for them, but yeah.
Yeah, but we'll take a look at Bitcoin now, because I talked about this last week with Jim. We had this move up, and I was just talking about how I wanted this, right, to trend lower back into new lows. So we got that move back into new lows, and I'm just looking for that to sustain and close into the lows of the month. And then it's kind of the same thing with the new monthly open. I personally have been looking for 48K from up here, but we can just mark out that previous month's low. Do we get a reaction at that previous month's low, right? That sets up some sort of move that is bullish, back up higher? Or do we fail to form a reaction there and then get another continuation lower or another month down towards that 50K mark? And so really that's it for me on Bitcoin. Is I'm remaining bullish until month end because this is a bearish monthly candle. And then I just want to watch the reaction at that previous month's low or these previous lows into the new month, new quarter. And we can take a look at the quarterly candle on this, but, a nice, it kind of messed around up here, but we still are closing lower, right? So, we do get some movement, not a ton of movement month close over close, but we do have a lot of range in there. So I'd want to see there. And then if we fail to form a reaction there, what's the next target? Right around that 48K, right? So higher time frame targets, just use the higher time frame candles.
Bitcoin's going to be a market to watch this quarter, T. I think that you're going to start seeing volatility there. Very similar looking scenario to gold, like maybe flush it out, get everyone out that's been hanging on to Bitcoin, get back in that range, comes in favor again. We'll see. It's been so dead for so long. You wonder if it's starting to brew for some volatility here. Who knows?
Yeah. And the way I view it is like you had all these people that are so long up here, and then you get a retracement, and they're just so used to buying the dip. They just keep buying the dip, buying the dip, buying the dip. Where's their stop loss eventually going to be? I bet a lot of people will put it right here where they're just like, all right, I'm over it, right? So I'd personally want to see that taken out, and then I could look to get long, right? And so personally, I'm not looking in Bitcoin longs until we take out this level, unless we get some sort of nice reaction, right? Nothing in here is very convincing of a move higher, right? We don't have any momentum.
Yeah. No, I've consistently lost with buying my spot over the last 2 quarters. It's not been great, but we'll see.
They don't have
I'm
they
out
don't
of
have wash
everything now.
sales, right? You can just sell it, buy it back, get the tax benefits.
Yeah.
You can say you planned it the whole way along there, Deli.
Yeah, different conversation, different day, T. All right, we'll wrap there, my brother. We're out of time. I know you're not feeling well. You're a trooper. I appreciate you being here with us each and every week. Everybody, go follow my boy T on X. Check out what he's doing in his YouTube channel. He's my guy. All right, T. Take care of yourself. I'll see you soon.
Yeah, thanks. Have a good one, Deli.
All right, everybody. Where do we even recap a day like today? Well, again, end of the month, end of the quarter. We'll continue to talk about it. I think the theme for today is, if this is your first end of the month, first end of the quarter, or one of your first ones, watch the action today, especially this one. I always look at Q2 as one of the tougher end of the months, end of the quarters. You're heading into the 4th of July. Book gets a little bit thin. I've always asked myself these questions when I look at the end of a trading day. Is it me? Is it the market environment, or is it my strategy? And when you look at today, the end of the month, end of the quarter, and a tape that we've had, don't take too much from what today is on your strategy. Know that there's going to be some probably ebbs and flows that move the book around. So just be small, be smart, learn something. As I always say, stay in the game to live as a trader for the next end of the month, end of the quarter. That's the goal. That's really all I have for you guys this morning, I think, as far as that, because really what's up next, these two guys, they're the ones who are going to walk you through what it's like to trade the opening for the end of the month, end of the quarter. Let's get ready to trade the open with Merritt Black and Christian trading boxes. We're back, boys. What's up?
We're back. We are so back.
Yeah, we are. Chris is muted. He's not prepared. Merritt, I mean, look at this.
Just kidding.
Come on, Chris.
Par for the course.
Just kidding. I love a little awkwardness starting with you two. It's always, it makes my day, kind of,
Just total amateur hour over there.
It's so. I mean, what is happening?
Listen, it's
how are you
5 in the
guys?
morning. All right, give me a break.
True.
It's true.
Those
I'd still
West
be
Coasters
sleeping.
got it rough.
Oh man, I know. What do you do with your day, Chris? I mean, what do you do when you're done? I mean, do you have all this time? What time are you going to bed?
I go to sleep bed at 9:30. But you know what's? It's good that the market closes early. But what's bad is that people are still having normal business hours here. So I sort of need to have meetings and calls after the market closes and have a regular business day. So the day doesn't really stop for me.
He's a businessman, Merritt.
He's a businessman.
That was my dream.
All right, well, let's get down to it. Anybody have any positions on?
No.
Not me.
Coming in flat into the open.
Little
All right.
tricky couple sessions.
Yeah. All right.
I'm bulled up, but we hit resistance, so I don't have anything right here.
All right. Well, let's start with you then, Chris, this week. Let's see what you got shaking.
Yeah. So look, guys, I've been extremely bullish because all we're doing is having a correction through time on the weekly, right? I have every sort of week I have walked you guys through this structure that we're in, and I've been trading it. We are correcting sideways. I highlighted last week that if we lost this daily bull bear zone at 700, 800 area, we would see a move down to the 50 EMA to then seek a weekly higher low. We got that on Friday. Yesterday was the big reclaim through that downtrend line here above that daily bull bear zone. And now we are into, we peaked a little bit higher here, and now we're sort of maybe going to be dancing around. So as we have this big break from the weekly higher low structure, we are now trying to see if there's enough buying present to take us higher to now reach the other side of that daily wedge and create a weekly lower high, right? As we create this consolidation from a swing high to a swing low, and then lower high, higher low, etc. So now that we saw that initial push and we're close to this resistance of this daily base we're in, I am focused on, I mean, it's still a two-way tape here as we consolidate, but I'm still focused on looking for a bullish reversal back up because this is just the first breakout higher. The first area of support here is this 970s, 980s. If it fails to hold, then we can see a move down into last week's resistance before the breakdown. You can see that we were sort of back, finding resistance here. We broke out, but continue to find resistance here. So that's the first area of support here from prior weeks structure for how I view it. If we lose that, then we come back down to test that daily bull bear zone I talked about that we reclaimed, which is a big, big, big area. So as long as we're above that, can we see the prices a little bit lower? Yes, but I have to think that we are now in a sideways to higher structure because we had a big daily flip that changed really the short-term environment. So I'll be looking for pullbacks into supports based on these scenarios. If we do hold this 970 zones here right away, then I'll be looking for a push back up to the overnight highs and then maybe a little bit higher, but sideways to higher for me as long as we're above, let's say 700.
Yeah, I mean, it seems in par for what we've been seeing. We'll go over to you, Merritt. I mean, this end of the month, end of the quarter, I talked about it earlier. It used to be my bread and butter. This was years ago. I used to love these days. They're not the same anymore. They're really kind of choppier sessions, and the closes aren't what they used to be. You see a ton of volume come in, but they're not like really, really directional. Right. What are you looking at coming into today?
I think that while we may have some short-term noise, short-term difficulty, as I tend to think a lot of, into quarter end gives, the bigger picture on a handful of markets are some pretty good trade locations. I think that if you go all the way back to whenever it was, I think you were not there. I think we were talking to Maggie. I think it was maybe the 9th of June, that Tuesday, when we were selling off. I was saying this is the bullish inflection point. We got a big rally off of there. We came in and retested it into the lows on, the 26th last week, and then we've bounced from that area again. So for me, big picture S&P, this is a bull uptrend for the year. And where we're seeing these pullbacks is just very standard, very logical in terms of depth and speed of pullbacks and retracements. And we've now made a momentum shift out of there as of yesterday. So I want to lean on the bull side. However, when you start to look a little bit shorter term from there, we've now kind of reached the upper edge of some distributions. Like if you look at my chart here, you can see we're at this inflection. If you see this volume profile from last week, we came out of the lower edge to start the Sunday open. And what have we done? A little bit of choppiness there on news or whatever. We have traversed up to the top. We stalled out into the close yesterday. We didn't reject it. We stalled out. And now here into the open, we're actually trying to kind of start to hold above. Look at all these highs. Look at where the edge of this volume was. We got this LVN, low volume node we could zip through up here to 75.28. So to me, that's kind of like scenario one is, can we hold this upper edge of last week's distribution that we're attempting to stay outside of? If that fails, Chop City reversion back to kind of that most traded price from last week, 74.40. So yeah, to me, we're at a nice little edge here. We're at a nice line in the sand. And I'm keeping in mind, I'm more bullish, bigger picture based on where we're bouncing kind of for the year.
I mean, I'm with
but yeah,
you.
Gold, the wick on the lows in gold, as T was pointing out, is very interesting.
It is.
There's some stuff going on.
Yeah, I actually have not done much in gold in some time. I would like to see gold get a little bit of a flush, stabilize back within the range, and see if from some of my stuff, if gold starts becoming like a trending opportunity higher. We'll see though. It's like right now it just keeps grinding higher, and I hate that. I wouldn't step in yet, but I'm with you. I think it gets interesting here in gold. I want to talk with Chad just for a minute here. So who put that in there? I think it was somebody was saying. I think it was Fanny. Somebody said, "Oh yeah, majority of everyone's always bullish." I came here to see that everyone's bullish market can go lower. Now, listen, if you come in and think that this NASDAQ can go lower just because we're bullish, it's a lot. It's a lot of power given us. I just think that these markets, when I look at them, it's so hard, I think, for traders, because we're traders, to continue to be with a trend, because we have this part of our body that just always thinks that, look, this has gone too far, or this can't happen. It's why I don't hold all of my investments anymore on my own, because I would sell every sort of big rally. It's just it's the way that we're built. And I think when you get into scenarios like this, where we've been around and we've seen this, these markets, man, when we look back at the quarter, they have pushed through. If we look back at this quarter, we'll just do a little recap of the quarter. Look at what's happened this quarter, guys. Metals closed, they're going to close near their lows. Energy is going to close on their lows. Equities back to their highs. Dollars breaking out higher. Now, when you look at that from a big picture perspective, you go back to where we began the quarter. What was interesting is that no one would have seen this coming, most likely not, where we are. But at the beginning of the quarter, these trends all started to happen. And when I go back and look at them, I say, okay, take note of what happened at the end of last quarter into the new quarter, and where we go now at the end of this quarter into a new quarter. Now you got the next couple of days, and I just want to leave it to you guys before I do maybe some other business with chat. Like, are you looking at that bigger picture trend? Like, is this coming out of this now? These next 2 days significant for you guys to see like how the new quarter starts to trend, and maybe if there is continuation of certain trends, reversals of certain trends? Are you keeping an eye on this moment right now? How are you, Chris, first?
Yeah, I mean, I'm in stocks, indices, everything. I rather focus on the trend than sort of, I know the quarter end and quarter start matter, but to me, I have to continue to focus on the trend structure. And I know, like you say that it's very hard for us to hold, continue to buy as we continue higher. But what's helped me is that as long as we're above a trend filter that I know I've sort of back tested into my strategy, then I have to execute, because the market's going to be smarter than me, and I'm possibly going to miss out on more gains if I do things based on my feelings or my bias, and that saved me more than not. So I'd rather continue to focus on trend structure. One day we'll have a big crash, but what will that mean is that we're finally above a daily trend filter, and if so, then that matters more to me than the time, the quarter, the start of the month, because that is my sort of nothing more factual than price action and whether it's above my own trend filter or not.
A simple no would have sufficed.
Yeah.
Listen,
it all started off this way today, that uncomfortable silence with Chris on mute. It's never regained momentum from there.
Listen, Deli just got back, right? He's Mr. Worldwide. This is the sort of energy you're giving him.
T-Pain. All right, Merritt.
For
your
me,
thoughts, end of the month, end of the quarter.
It does matter, but only from a technical perspective. So you get that new month, you get that new quarter. Those are periodicities that I'm using to look at where was last month's volume profile distributions, where was last quarter's. So we have new references that will be created day one of July and whatnot. So for me, from a technical perspective, it gives me new things to look at and to use.
Yep. All right. I'm with you, because I agree. I think that's well put by both of you. Knowing where we've come from and how trends can start to change. I mean, Merritt said it a little bit more, succinct and a little bit more in that. But like we said, Chris it's been off since the mute. I mean, he'll figure it out throughout the morning. Chat, you like this hoodie? You want to win a hoodie? Production, put the link in there for the newsletter. Next Monday, Tanya and Selma are going to be picking a winner from our newsletter subscribers to win a hoodie. So if you want to win a hoodie, I wear them all the time. I mean, half my closet now, or at least in my office, is like NinjaTrader Live hoodies. So if you would like to get one, we'd love to give you one. Sign up for the newsletter. Oh, and also you're going to get every morning. You're going to hear from Jimmy, Shai, myself, Craig, and so sign up for that newsletter. Next Monday, Tanya and Selma will be picking a winner from everyone that's on the newsletter. So make sure you're tuned in for that, boys. Great to be back with you guys. I miss my guys.
Hey, look at the what Aaron Smithmeister just said in the chat.
I
Shad,
got to
you
see
got a
what he
minute?
said.
Chris is going straight to HR after this.
They're
Oh,
picking
yeah.
on the DEI hire, guys.
Come on, Chris. You know, you're coming in a little off today. It's all right.
He's the
I'm sure
man,
Merritt will
and
support
everyone
you.
knows it.
Yeah, I'm sure Merritt's very supportive too. You know,
He's about to trade me under whatever the phrase is. I can't think of it.
Is there
No, I'm
anybody
off.
else I could do this with on Tuesdays?
Straight to jail.
Literally, anyone in chat, we are putting up on
Anyone.
Indeed.com
Just pick someone.
to replace Merritt and Chris.
Yeah. All right, boys. Chat. Great being with you all this morning. Hit like and subscribe. Show some support and love from my boys. I'll be watching you guys. Perfect guys for end of the month, end of the quarter. I'm sure you guys are going to talk about a bunch of stuff. And I'll catch you guys in chat. All right, everybody. See you later.
See you, brother.
Take care, Dilly.
All right, Chris, let's bury the hatchet.
Okay, go ahead. Start. You can apologize.
I'm sorry for making fun of you all those times, for pronunciations, for general stature, for general slowness of I have to start digging at you when I'm apologizing. I can't even apologize.
Sorry, you were born ugly. I
Straight
don't know.
to jail. Oh, it's too much fun. We can't bury anything.
Sorry, you cannot be as tall as you wanted. I'm sorry that the compliment sandwich.
Oh man, how are you doing? You good?
I've done better.
Ugh.
I don't get verbally abused on other days of the week.
Man, this is killing me. Oh.
Apologize for the 9MA.
Oh. But yeah, you know, this has been a tough stretch. I know, on a serious note, I know a lot of people in a little bit of a drawdown right now. I really do. I think we've just gone through rollover. We've gone through a period of topsy-turvy headline risk. We have gone through now kind of quarter in some weirdness with, you know, order flow and some choppy kind of stuff. This has been a tough stretch for those of you at home. This has been a bit of a tough stretch in market conditions. Some of you may be saying, I don't know what he's talking about. I've been doing great. That's fantastic. You know, it's, you know, everyone's different in terms of when they have periods of underperformance and periods of, you know, really strong performance. Those things are not going to line up. But if I were to, you know, group, I'm seeing some guys on the desk. I'm seeing some folks in our fellowship program, some kind of wet behind the ears. What is it? Wet behind the ears? Green behind the ears? What is it? Anyways.
I don't want to know what you do with anything wet in the ears, okay? Don't bring that over here.
I don't even know. I don't even know where to begin with that. Yeah. Man, we're giggly today. Hopefully we can trade well. The chat is saying, wow, this is what I woke up early for?
Wow.
Wow. I mean, honestly, I feel like we have an above average thumbs up count today. I feel like they like the humor.
Yeah.
Okay, where do you guys get the brownies?
NinjaTrader. I am bullish because of the overall larger daily structure. We are technically below the daily 9MA. Yes, you are right to that. But you know, as you develop an eye for market structure over time, you start to get a better understanding of what structure allows for price to reclaim the daily 9MA before it takes place. But we technically have not reclaimed it. So, you know, for the IB strat, it will be looking too short today as long as we're below the daily 9MA. Why did I take that short 5 minutes ago? Because this is support for me and I'm interested in a long here, but I took it off at minus 0.3R, 0.4R. And I'm going to wait to see. I mean, it's still sideways structure, but very bullish against Friday's low. Especially for this holiday week, especially after all the breadth readings that we were all oversold. Put and call ratio was the highest since March. Seasonality, we saw the worst of June and we see a rally into July. I mean, there's just so many things from data perspective that marked a good low. Can it fail? Yeah, but we don't know that yet.
Yeah, that's a good one. Stowe said it's unpatriotic to sell this week. My wife's been getting a lot of compliments on her T-shirt she was wearing yesterday. It has a little American flag, and it's underneath it. It says "Too Fitty." Pretty good.
Oh shit, she's hip. You guys are a
She's
hip
hip.
family, huh?
He's hip. We're hip.
Okay.
Look at me. I'm hip. I'm hip.
Okay.
Nope. Please don't clip that. Don't.
I didn't know.
I regret it. I regret it. Don't clip
I
it.
didn't know we had a new DEI hire from
Please.
India.
Nope.
Wow.
Austin.
Wow.
Nuh-uh. Quit it. Sit.
All right, zip it. Zip it. Zip.
Hi, Chris. In one of your videos, you mentioned the EMA cloud of 16 and 28, and now you have 20 and the 50. How do you decide on that? So the 20 and the 50 are the moving averages. The 16 and the 28 are the on what time frame? The 16 and 28 is the range that I look for the EMA cloud on the daily. I don't have that on here. So for example, here, this is the daily chart. You see this darker green cloud, the 16 and the 28 moving average. By the way, I pay no attention to that. Okay. Those numbers don't matter. It's just the width of the cloud that I liked for my approach. That sort of hugs this support area very well. So that's why I went down to the 16 and the 28. The more important moving averages that I look at is the 20 EMA and the 50 EMA. I've learned so much from Chris and his calm demeanor under pressure, even with maybe especially with his physical issues. Damn. Okay, thanks.
I don't know if that's a really nice kidney comment, or if that's a but he's short.
You know what? I really like him, even with his deformities. Thanks.
Thank you. That's awesome. Man, we are firing this morning.
You know what, John? I don't care what they say about you. You're a cool guy. Actually got that tested and it is not low. Okay. So me and TTrades will go ahead and eat the healthiest food and we'll live longer. Okay. So that's what matters.
Yep. I'm over here eating Chick-fil-A 3 times a week.
Yeah, and that's why you look like that. I can't help it. I'm 50 years old and look at me.
Oh, T actually knows his T levels.
It's over 9,000? Jesus. Cheese and rice.
900.
Oh, you don't get that reference. You're
Oh,
not
no,
hip.
I don't. What's that from?
He's not hip, guys. Okay, we do have a divergence here between ES and NQ at this new low. We have 3 minutes into the open. Let's see how the open looks. I'm gonna have to wait.
Let's get we get like a side bet going on like T levels or something. Anxiety between the Merritt chart, not having space between the candles and the price.
Yeah,
You know,
let's see how
I'm
the
with
day
you. I
goes.
really like a nice amount of space. I like a little margin. That's definitely how I prefer them. I just have been too lazy to change it.
Oh, we are gonna bounce from here, huh? Those tricksters. I'm looking for a 4-hour higher low, so it might be here.
What is DHT? T? Is that steroids?
DHT is where you get fish oil from. It's for your brain. Clearly, he doesn't have it, guys. He needs it. DHT is crucial.
Dihydrotestosterone.
Okay, what's
I've never
DMT
heard of that
though?
one. I
How are
thought
your
fish oil
levels?
was like omega-3s and stuff like that.
How are your DMT levels though? Are your DMT levels high or low?
I don't know what DMT is. I feel like that's a trap.
He did.
It's based on your tone.
He's not hip, guys.
I've definitely got hair loss.
Okay, so we're holding the support as we go into the open. God, what happened to FTNT? Why is it down? Fudge.
I'm long. Long and strong.
Did we get a little effery here into the open? Oh, there it goes. Yes, yeah, this is going to break out. Let me see if I can buy this.
They're probably going to snap it lower on the open on us, though.
Oh, that's what I wanted. We're looking for a higher low here, like a quick higher low.
Probably start to peel out at VWAP. Right there, right there. Scale them. Show them the size.
That's what I wanted, guys. That's what I was looking for.
Little VWAP chop fest.
We're above the daily 9 SMA. Let me look. No, we're right at it.
Mm-hmm.
There's the move. There's the move I wanted.
Get good.
Get better.
Scaled some more out.
I gotta let you guys get some points. It's okay.
It's okay. They can watch me trade.
Why do they do this to me, guys? God, it was that SMT there. NQ made a new low and ES did not. That was it.
Thanks, Koopa Loop.
Ooh, AMD. Gotta focus on stocks real quick. What's going on here?
Saw a commercial the other day for wet AMD.
Say what?
I think it's like something with your eyes or something. Sellers piling in. A little herky jerky.
Ooh, AMD's breaking out. I need more. Guys, this is a bull market. Sideways to higher. I said it.
Yeah, Maya, Maya's asking, Merritt, when you say your edge comes from the edges, do you define your edges to be the current day, week, month, or all of it combined? Number one, I don't look at any current profile. I only look at completed prior profiles. It's a little bit of circular logic. I'm not saying for everyone, but I will say most people that I see use, in particular, the current day's profile. It's a little bit of circular logic. Sometimes they will go back and they'll say, oh, look, that was a trade from the edge of today's profile. Well, guess what, pal? It's the edge of today's profile because that's where the trading could not go past. And so you cannot look back upon that and say, oh, from that same period and say, oh, you can use it. It's like Eric says, it's like, buddy. So for that reason, I look at prior profiles. And then, yes, I use multiple different periods to look for confluence where they agree, dissonance where they disagree, and then you start to, piece things together from kind of a top-down approach. Hope that helps.
Jesus, ES sucks. Guys, I made the mistake of trading ES yesterday versus NQ. Oh my gosh.
Didn't like it.
I missed out on so many points.
What made you use ES instead of your more common NQ?
Because I had a really clear picture of what the structure was for ES, and I was looking to swing it as well. But I tried putting it on my swing account. My account was locked for some reason. I had to, call Ninja to see what was going on. So I couldn't place my trade. So I'd be in a swing right now.
Oof.
And so I was like, what the fuck in the moment. So I was like, I'm just going to buy with this other account. And so I bought it. But in that moment in time, I was not like, I was like freaking out. I was like, why can't I place a trade? And I just did not get the entry in NQ.
This
Look
market
at
is
this.
really herky-jerky, guys. A little squirrely.
This is the move I wanted. Man, what a push.
What do we got? PMI in 10 minutes?
Oh, that's so annoying, man.
The next shot is more important than the last mistake.
I'm so bulled up this week too.
Smart Trade Paulo, Merritt. So you look at yesterday's profile instead of what's forming right now. Do you do the same for the week? Yes, for all periods. I look at prior only. Merritt, I rewatched all your courses last week. Still found new gems. For me, the most important things. Realize when it's good spectrum of opportunity, and the rest of the time sit on the hands. Absolutely. It's either, step one in trading is to have defined edge. And so part of that means when there's something to do and when there's nothing to do. That's step one of really putting together a process, a methodology. You got to pair up a risk plan with that, and then you start working on right? Closing the gap between what the system offers and what the system makes available and what you're capable of extracting yourself from that. And one day at a time, one process goal at a time, just getting 1% better each day. What tools do I use to say if we're ranging or trending besides just using my eye? Well, I use my eye to look at tools like balance areas and value, whether that's a prior value area of a balance area or whether that's a developing value areas you see on my intraday chart. Right now, I would define the S&P as, what words did you use? Ranging. This is ranging because we're trading in between the +1 standard deviation and the -1. So, I'm in off of a bounce off of the lower area. Intraday, I'm in from kind of a test from above into the main tiny closing volume distribution from yesterday, and it's a retest of the upper distribution from last week. So there you go, confluence, multiple things supporting, being like I told Crudele, before the open, long from this region until proven otherwise. So, if you're trading inside of a balance area, that's what I look at to see if something is ranging, and if you're trading outside of balance, that's trending. Keep it simple.
KISS. Chris, when only one higher high or one lower low or one higher low happen, price stances around the estimate creating consolidation. Does that automatically reset the higher high, higher low structure? No. The structure goes higher high one, higher low one. That's the first consolidation out of a breakout. We should, most of the time, I would say 95% of the time, we push out to the second higher high, second higher low. And then 20% of the time, we see a final and third higher high. That's like the blow off sort of part of the trend structure. We don't have to. But when after the second higher low, if that ends and we correct through time where we create a little wedge contraction, at that point it resets, and then you can start a new higher high, higher low structure, or lower low, lower high structure. Okay, but it's after that second higher high, higher low. But 20% of the time, the third one could take place, but usually it doesn't. Then we consolidate. This is when you have then the 9MA go flat and sort of price dances around the, like if you look at the daily right now, and the weekly, the 9 SMA is price is dancing around the 9 SMA, right? Price is not respecting it. So we're in this wedge part of the higher time frame structure. So just imagine what the market will do when we start a new, and it resets and start a new higher high, higher low structure away from that.
So this type of price action is what we were referring to pre-market about shorter term, end of quarter kind of pain points and what it's bringing. These 5 to 10 point rotations in the S&P, if you even call them rotations, and let's call them 5 to 10 point liquidity vacuum zips, right? That's the better term for them. It just makes for really, really tough timing, momentum read on a short-term basis. We can have all the, longer-term views and good lines in the sand and whatnot, but in terms of the actual rubber hits the road, executing, timing up a pullback, if you're a pullback trader like me, this is brutal. One thing I am looking at that's a bit concerning for the long position here short term is the way that we're now in something of a bear flag off the starting around 8 a.m. Central. If we were to draw kind of trend line underneath this and above this, this is a kind of a bear flag. So if that starts to crack, that puts my stop in a pretty vulnerable place. We'll watch it. As in, I might bring in the stop a hair. Again, as I mentioned, we are rotational. I really hate to do that. That's not standard trade management for me for a rotational consolidating market. If you trail stops tightly in such an environment, you're just guaranteeing you take yourself out and you don't give the trade a chance to work. Yeah, Tom, that's a good way of putting it. A 5 to 10 point bipolar market. Jolts in a couple minutos. No, PMI, and then jolts later. Thank you, Tracy.
Oh, July 27th, single stock futures are coming out.
No, Jesus, I have not moved my stop. Technically, I moved it from the emergency stop location to the real stop location, but practically no. Really, I want it a little bit higher. I think if we start to come back to those 833, 834 lows right here, I don't want to. I think those will get ran, which puts my stop as kind of like the sucker stop. So, really, I kind of want to be at those levels, like right here. So it's fine.
All right, so that is scenario one. Let me share this. That's scenario one we just saw. The idea was that we could pull back into that overnight low for support at 970s, like I shared in the morning, and then bounce back up to highs and reject, which we're seeing a little bit of. Guys, so when you understand market structure over time, you get to develop an understanding of the high probability outcomes from trend structure and like the high probability path moving forward. And that was it pretty much. So now, since we are up at base at this sort of Thursday's high breakdown, if we can form acceptance up here, then we can see a push higher through this and go into 30,000 430s. If we reject back down, well, we have support at 970. So we will need some acceptance at the highs in order to see follow through. If not, we can stay rotational like Merritt says. ES, I don't even want to look at ES. I think it sucks in my opinion. This is an AI market. They only care about AI and technology. They don't care about banks and all this other stuff that ES has. Tecnología, as they say.
In the old country.
Yep. TTrades was on already. Gotta make sure you look at the schedule there.
I'm scratching out. Called an audible. Really, really crappy upward trajectory. I got to a place where I felt the odds of this kind of bear flag breaking started to really escalate, and no longer felt it worth it to hold through the chop. Who knows? Sometimes those audible scratches are good. Sometimes they're bad. Sometimes it makes you look like an idiot. But net, after the next 1,000 trades for the rest of the year, I come out a little bit ahead by making some of those more intuitive calls. I do not recommend that to more beginner developing traders. You got to kind of earn the right to incorporate some discretion into your trade management. Because most of the time, all that's going to be for you is making wrong, impulsive type of decisions, as it was for me for many years. $17 minutes on the hold time there. Max adverse excursion of about $40. Max favorable excursion of 1,100. Booked 762.50 of that. Looks like these highs are vulnerable now. It keeps stacking up and pressing into them short term. Merritt, how can a developing trader capture most of MFE? More so if I'm a scalper. It's a complicated question. First off, in general, your goal may not be to just maximize what we call exit efficiency. Exit efficiency is kind of P&L divided by max favorable excursion. Your strategy, for example, Chris's strategy, right? The way he trades a lot of times, his goal is really not to maximize some type of exit efficiency ratio or percentage. He's looking to capture bigger moves. He's looking to allow for a lot of open P&L to come back to nothing. And so that's not the goal. You could argue that you could look at data over time. It's complicated because conditions change over time. That he might be better off, just hypothetically, booking some profits at certain excursions and things like that. But in order to improve the exit efficiency for a momentum scalper short term, the answer is pretty simple, because once you start to get favorable momentum in the trade, if you're letting too much of that come back, and that's where your exit is, that just means you're not fast enough on recognizing the shift in momentum. If you're really just trying to capture that direct momentum, that's an easy one. Other strategies where you sit through pullbacks and you allow kind of counter rotations against the position, it gets trickier in terms of adjusting to what your max favorable excursion data is showing. One of my favorite things that I look at is on the flip side. It's looking at, in fact, maybe no, I can't show it yet. There's the squeeze. Look how much, wow, that was like 1,500 contracts that just came through right there. Whoosh. Looking at, where are you stopping out on trades, and where, for trades that ended up working, how much heat are they generally taking in terms of max adverse excursion? And for a lot of traders, you can kind of find a line in the sand where, look, you have no winners or no worthwhile winners, or the losers that accompany this data set massively outweigh the random rare winners that you get when you take heat beyond XYZ threshold. And you can kind of find a cutoff point at which you can kind of tighten stops, and there's no need to take more heat on trades. You can actually save yourself a handful of dollars on the next 80 trades, and yeah, maybe you lose out on a couple winners. So there's MAE, MFE data is really, really powerful stuff to have at your disposal. So yeah, my audible scratch out exit core position looks pretty stupid here in hindsight. I mean, look at that delta, though, during that sequence when I made that decision. Look at how there was just absolutely no one buying this thing and how crappy it looked. Almost like a little bit of a passive seller, which is why we continue to kind of knock on the door of this 75.10 area. And then, just random whoosh. Yet again, why did that happen? Quarter end, my friends. This is the type of noise we deal with quarter end. So great trade there. I'm happy with the call that I made at the hard right edge to scratch. Over the next 100 trades, I'll make that decision the same. Yeah. Yes, Guy, this is a 3,000 volume chart with VWAP bands, correct. With cumulative delta on the sub pane. But Hussein is in our fellowship program, and I can look him up here on my dashboard. Hussein, do you mind if I talk a little bit about some of your stats here on stream? I want to talk a little bit just about like exit efficiency for you, because I've got those numbers for you.
Chris would never exit a winning trade. I ride it until I get stopped out.
Well,
my purchase is different.
Yeah, I probably have a better exit efficiency, but Chris has more home runs. There's no free lunches. That's the trade-off.
Look at this move. Man, I'm still annoyed.
You gotta tamper. I'm not talking to you, Chris. You gotta tamper expectations during rollover, during quarter end. You have to tamper expectations. And for me, crappy conditions, crappy overarching, like, quarter end type stuff, and I'm getting really crappy order flow and things like that, and crappy price action. Can I say crappy one more time? And I take, whatever I took, 10, 12 points out of a move on a crappy day. I am okay with not catching the rest of this. I'm really, really okay with that.
Hey, fiber optic, that's awesome. Do you snowboard like you trade, Chris? I do. Well, see, guys, here's the thing. You guys think I'm a day trader, but I'm not. I am a swing trader. I am using day trading entries to capture swings. Okay, so I'm looking to capture the full day's move and more. I will hold that overnight. Okay, that is my objective. But sometimes there's no trends and you just have to pay yourself and get out of the trade. But I will hold it all day. All right, the IB strat will be looking for longs today. And see how it performs. Good month. Few losses towards the last few days, as you can imagine, because of this range action that we've seen. But maybe, hopefully, now that we're above daily 9MA, we can go back to multiple day winners. But we'll see. Not really focused on the short-term outcome. Strategy is up like 450% since March. I swing trade both. I should be long ES right now on a swing from where? From 74.24. That cost me 5 figures for sure. Not being swing long that because I was locked out of the account. I had no idea why. They fixed it right away though, but still, it's not like I can send them the bill.
That opportunity cost bill.
Yeah.
I've got a few pretty big opportunity cost bills over the years. For sure.
I just started a separate account where I put some money in there, and my goal is to find trades where I can risk 2 to 3,000 and then go for anywhere between 5 to 20R. So that was yesterday's scenario. So I can risk $2,500, and you can imagine what I'd be up right now.
Trading from my phone on a surprise cut day. I remember trading from my phone during Brexit.
I've taken this wedge break, Jesus, nonstop. I mean, this is the move that we're seeing to a weekly lower high. Sometimes they are aggressive like this, not letting anybody in, or a short squeeze taking place.
Chat needs to start tagging Hussein Amani 7636 to get him to answer our questions so we can continue the conversation. I know he's not going to care. I just want to make sure he hears in response. Spam him. Answer me. Do you mind if I share a few tidbits from your stats from your fellowship account, sir? To continue our exit efficiency conversation. Cool. All right, here's some stuff, chat. This will be pretty cool. Here's some stuff that I track on traders. Top left is the ratio of the top right chart. And so this is Hussein's favorable excursion on a rolling 20 trade sample size divided by his adverse excursion over the same rolling 20 trades. So as you can see, he's trading with favorable excursion edge. That doesn't mean that he's, necessarily booking the P&L. And in fact, as we can see, a lot of his P&L line, as we'll get to, has been underwater over rolling 20 trades. So, but the good news is that, and you can see this in the individual lines in the top right, that green line, that average favorable excursion, it continues to get above and to kind of leave his adverse excursion line. And so that's why this ratio, sometimes it comes down and touches 1-to-1, but then a lot of times it's up at 2-to-1. So that's very healthy, very good. That means that there really is at least some timing edge to Hussein's entries and how he's matching up trades and whatnot. As he's lamenting, his exit efficiency, bottom left here, is a bit low, right? So only capturing on average over 20 trades, about half up to kind of 60%, is on the lower end. Back over here where he was capturing, 70, 75%, we saw that P&L over 20 trade samples really kind of making money. And so here's another graphical representation. I love this bottom right chart. So this is kind of both the green line and the red line, but then with the P&L in as well. Very, very powerful data point here. So this is rolling 20 trade sample size, how much favorable excursion he's having versus how much adverse excursion he's having versus where he's booking P&L within that range of possibilities. So some pretty cool stuff there. So yeah, it looks like, we could beef up the exits a bit, but as we know, it's been some tough conditions lately. So conditions matter as well. But we'll continue to keep an eye on that and see if you can pick back up and get that exit efficiency kind of into the 70s or something. Your first scale out percentage is only 16%. Actually, let me look at just this month only. Even worse, 12%. So big time work to be done. And in fact, if we look at there's opportunity cost, yeah, there's a huge potential P&L swing if you start taking a first scale at where you typically take first scales a little more consistently. You'd be doing a bit better. So I'd say that could be a priority for you here the next couple days or so. Gotta along the lines of exit efficiency and whatnot. Let's make sure we're getting some quality first scales whenever they're available. You average scaling out about 28% of your total size on first scales.
Mhm.
One more thing, and I'll put a bow on this. This chart right here. I alluded to this earlier. Green dots are winning trades. Red dots are losing trades. This diagonal line is 1-to-1 ratio of favorable excursion to adverse excursion. So anything to up and to the left of the line is where you're getting more favorable excursion than adverse. Opposite for below or to the right. But there's kind of a threshold here where if once you start to draw down more than $160 or so, you're starting to not see trades come back. Yeah, there's 3 of them here, but if we were to cut off all of these losers, then you see your winning trades, they tend to kind of just work. You're drawing down $75 or so on these winning trades and having some really good risk reward multiples on some of them. So that's another thing. But first I'd focus on the scale outs, and then we can take a look at maybe whether tighter stops and whatnot is could be cool or helpful. Having good data, having good stats matters a lot, guys, and being able to see good insights into what's going on with your trading. No, this is not available to the public. It will be at some point, but not yet.
We had a 4-hour dynamic higher low. We've pushed into the second 4-hour 9MA higher high, and we do have divergences up here, guys, on the 4-hour. So we may have seen the daily lower high up here, where NQ has divergences. ES does not. There's just nothing bearish about this going to the open. Nothing bearish. I know, KTS. That was the location. See, the trade plan is a better trader than me because the trade plan is correct 95% of the time.
60% of the time, it works every time.
Yeah, I tried it. I took a 0.5 R stop. We made a new low. And on that same candle, we just lifted higher. And I was waiting for a little bit of a rejection to create like a, it's the structure that I know, lower low, lower high, and then push. But it was just a one candle reversal and go. But it happens, guys. One trade out of many. Like, I probably make, I don't know, 800 to 900 trades a year, split between two day trading strategies. But this was a good one. It was, let's see how many R's. 8R on this move. So now I need to wait for some acceptance up here. Cats. I have to say it's not going to work before. Yeah, I do that with the IB strat. I need some acceptance or a pullback to engage. On that 4-hour 9 SMA move that just happened, did I miss it? Yeah, I think I just shared that I missed the trade because you didn't get a reset. No, there was. What do you mean by reset? Are you talking about the 4-hour structure or the 2-minute structure here? I missed the new buy here because what the usual setup that I get is when we make a new low, like for example here, you make a low, lower high, and then a little bit of rejection, right? So if you guys saw my earlier trade, like I waited for that and then I took this reclaim bounce. On this new push lower, we made a low and there was no bounce to the 9MA to create a little bit of a rejection and then attempt to break out. In that same new low candle, we immediately got the reversal, right? Like the next candle was immediate reversal. I would say that's an aggressive entry for me. And therefore I didn't take it. I said, okay, do I want to be aggressive like that going 2 minutes into the open? I like the location, but we don't have the exact structure, right, that I'm looking for, the lower low, lower high, low to rejection to get long. So because of that, I didn't take it. And that's pretty much why. I'm still making money, I have swings on, but stay trade account. I mean, ES is just so much weaker than ES. So what's banks doing? Banks are flat. Industrials red a bit. Flat. SMH is where it's at. Yeah, I don't mind taking trades at the open, and that doesn't really. Location is more important to me. I think, to me, fear around the open doesn't have the same priority as location. Location is always more important to me. All right, we have 15 minutes for the IB. That'll be my next, while I wait for my own discretionary setup. I will get those accounts ready and see if they work today, if it pays. But my job is to be the best employee of the system and execute regardless of what I think. And success means following the rules, not whether if it was a winning trade or not.
No, the green and red bubbles and arrows on my charts have nothing to do with delta. They're purely price momentum kind of based.
All right, let's see what we get, huh? I'll move this count over here. We still have 15 minutes. We might get a little bit of a pullback here if we can't continue higher.
Gold pushing highs. The top of last week's. Kind of main balance is just higher up here at like 72.
What's my discretionary strategy, Pablo? It's the one I share here every day. The when I create a trade plan, I execute the trade plan. That's my discretionary strategy.
No, Maya, that's not true. I don't just look for longs above the +1 and shorts below. A lot of times I'm fading those extremes back towards the middle. It depends on the contextual view.
Damien, I just look at RSI. I like, having reversals or buying reversals when there's an RSI divergence. I am all over that. What is the red line on top of my charts? This is what the range for the IB is looking like. So I'm working with Ninja to create an IB indicator. And this is the first example of that. Not the biggest fan. I wanted to show up when the IB starts. But right here, it is tracking the sort of range from the IB high to the IB low and what the midpoint is so far, which is this yellow line. What did this move give?
Crude has just been ranging around in yesterday's balance. Nothing has changed since the close yesterday in crude. Came down in the overnight low, just a few ticks shy of that kind of 69.50s balance low from yesterday, and then these last couple swing highs here, just north of $71, are kind of wicking the upper edge of yesterday's distribution.
And that by Marvel. Damn it. Yes, weaker versus NQ. NQ may want to push out to new highs here.
Yes, Tom, Ninja is a brokerage in addition to a platform. Correct.
I don't think you can trade stocks on Ninja, can you? And trade stock options? Oh, and futures? Tom, you call customer support like any other company. Man.
Healthy buyers still.
Yes, breaking out of this little 2-minute wedge here. Let's see if it goes to 75.43, which would be the next target on a hold of 75.20s. Not that much acceptance, so I don't know if it'll have like real follow through. But it is the holidays, so
Oh, when do you trade with the trend and when do you fade it? Isn't that the $1,000,000 question? Do you use certain deviations for that? All right, so a long thread here with Maya on these questions of periodicities, balance, value, prior periods, VWAP bands, plus and minus one, blah, 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 blah. So look, I trade what is. There's the context. Okay, so A trade idea might be on one time frame, it's rotational inside of a balance area, testing the upper edge. On another time frame, it might be breaking down and retesting the bottom edge of a balance area. So it's trending and retesting the structure that it's broken out from. Those two things together form a trade idea. And then how I end up executing that on lower time frames is just, pullbacks and rhythm and acceptance based on the line in the sand from contextual levels. So yeah, trades for me are often simultaneously, just on different time frames. Trending plays, mean reversion plays, they're the same thing, or they're happening simultaneously. It's not so simple just to call for me, this is a trending play, this is a, blah, blah, blah. Intraday, I'm aware of if it's just like I was narrating with the S&P trade when I was in it, I got long from the lower edge of the current day's developing value, right? And I flattened over here as it was struggling at the upper edge. The trade was constructed from breaking out above and holding last week's balance. Remember, I talked about that pre-market. Here's the LVN, if you guys can see my full screen. Here's the low volume node all the way up to this upper edge. I think I mentioned we probably revert to 75.40, that kind of big HVN right here, if we were to hold this 74.90 kind of edge, which we did, which is where I traded from. I just didn't hold the core position because of conditions. So I hope that helps. You piece it all together from multiple time frames, and it's the same concepts across different time frames, but you find areas where they work together, where they are giving the same directional bias read.
Pablo, can you ask that question differently? I don't know what you mean by that. To sell on the 2-minute, would I expect it to break and retest the 20 EMA period? Or could it be a single candlestick or more to complete the retest? Are you talking about the wedging structure? So I don't know what has to break. That's what I don't get. Had a big breakout. No pullback for me. A sad day, guys. A sad day. God, so many stocks are moving. God, this market wants higher, so much higher. You've learned that when you miss it, you shut it off and step away. I don't feel like that. I don't revenge trade. This is my job. I need to be here. Okay, so we have the IB set up. We are above the 25% mark. which means we need to pull back. Why can't I make this bigger? Hello? Okay, so we need to pull back below this 25% of the IB in order for me to look to engage. So we need to pull back below here, create a pullback, and then attempt a new bounce. So unless that happens, there's nothing for me here for the IB strat. This is just continuing higher. So it's just a waiting game for the IB strat here. Because that's the rule I have. I have different rules in place, and we need to pull back into that area because the strategy looks to engage inside the IB as it looks to participate in the expansion of the candle. And if the expansions are already taking place, then you can imagine the rule to engage inside has not been met, and therefore no trading is allowed for the IB strat. We're moving to close the gap here in NQ, or sorry, not NQ. Well, it is in the RTH session, there is a gap. But on the Qs, we're moving to close the gap. We are very close. If you look at the RTH session, gap closes around 30,550s. It wants to pull back. Sorry, it wants to close it here soon.
All right, let's do some coaching for Candle Nerd. Quote, this sucks. There's no entry here. I took 50 points going long and closed. And though thought I was a hero, and now it's almost 200 points higher. End quote. The only thing that matters is how did you manage that trade relative to how your process for trade management calls you to act. That's all that matters. Everybody's got to grow up from the woulda, coulda, shoulda. Oh, in hindsight, here's what happened. I knew I should do this, blah, 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 blah. The only thing that matters is that you have a way of operating and you measure yourself relative to that. For me, I could be saying the same type stuff, right? I was long from low of day. I was long from right here, I believe. And I exited somewhere in this little choppy section right here, right before the spike. So I could be sitting around saying, oh. And in fact, if we rewind all the way to pre-market, I said if this area holds, we're going to where we just literally spiked to right now. The idea that I laid out pre-market has just been completed essentially to the tick, low of day and high of day. So I could be a little complainy, couldn't I? But no, the order flow was trash. The price action was trash. It was a bear flag. And I thought the odds of us coming back into that region for a bit of a nasty end of quarter shakeout was really, really high. And my plan allows for me to make such audible calls to scratch out of a core position like that on a crappy day where I don't really want to be holding a core, even though I do have a line in the sand and a plan for a destination. I'm okay with it. You know, I think 60% of the time over the next 100 trades, it's going to work out for me. 40% of the time, I'm going to look like an idiot. But I'm just going to come out ahead on that. And my testing and whatnot has shown that's true for me. So I just want to encourage the person who lamented in the chat and all of you to start to think more like that. What did I do that I could control? What did I do relative to my process? What variables did I take into consideration at the hard right edge? And are those the variables that I'm supposed to be taking into consideration? Did I bring in something external that I'm not supposed to? Did I give in to some impulse or emotion or fear that I'm not supposed to? So that's how you want to judge your trading. I very rarely come across traders who come onto the desk who, number one, do really high quality review work. And as a part of that flaw, they don't judge their trading in an honest and objective way. And so they're missing out on good daily reps to actually get better. And so it's something I'm very passionate about and very, very important.
Chris, what is the 50% of that RTH gap on NQ? I do not know. I have not done any fib work. I don't do any fib work. What is it if you happen to know? Chris, in the IB strategy, sometimes price breaks the IB high and continues. Do you always wait for it to return to the 50% level before entering? I do not wait for the 50% level, Pablo. I wait for, if we are above it, I wait for the first level, not the 50%. I need to engage inside of the IB, not outside of it. Outside of it, my chances of capturing a trend have greatly diminished. Looks like we're coming back in. Come in a little bit. I mean, if we pull back to this 30,000, 28, 27 area, which is the first sort of, you know, I don't know if it's, what do you guys call it? The 25% mark or the 75%? I never looked into it. Didn't really matter to me. But this first IB level here, if we pull back to it, then I can look to engage in the strategy. Right here. All right, so it's just a waiting in to see if we pull back. And then, you know, at that point, I also have to wait and see if it works or not, which I'm not really focused too much on that. Are these last 2 days a bit weird with the quarter end rebalancing? Sure. I don't know. To me, it's not. Maybe Merritt will have a different answer, but to me, it's just we were at a weekly support level in the market. Breadth readings were extremely oversold. The data was there to show that we could get a big bounce, and we did. Do funds buy up into quarter end to show in their statements that they own a company? Yeah. Could that have played? Yeah, absolutely. Seasonality as well. We saw the June pullback, rally into July, and seasonality says that July we see a rally. So all those are true. Cool, let's ask Lumi, what is the 50% area?
David says, Mr. Black, oftentimes I find that CVAs actually don't support the narrative picture as well as long-term VWAPs. In your opinion, can I trade NADRO without CVAs? Basically, ADRO. I mean, that's the wrong acronym because you're just using long-term VWAPs as the N, so it's still very much NADRO. No, I mean, it's just dead wrong. It's just dead wrong. But yeah, you can do it. I have plenty of people. There's a lot of people who say that they don't like the long-term VWAP stuff and they prefer the nice structural balance areas and whatnot. That's how our fellowship folks trade. They don't trade with any type of long-term VWAP stuff at all. So you're more so just kind of reacting to your own preferences, the way you think, the way you see things. It's not that CVAs are bad or good or long-term VWAPs are bad or good. They're both fantastic tools for framing context. And if you feel stronger about one that clicks for you, by all means, lean on it, use it, and you don't have to use anything else for context. Both of them together, if you learn how to handle a bit more times where there's dissonance, where they disagree, it is more powerful. It does provide you some second chance trade locations, some things where perhaps you couldn't get away with it just leaning on one, but absolutely just using one is perfectly acceptable. Perfectly acceptable.
Like it's failing at the IB high.
Jimmy Keggs with the IB stats in the edge alerts now. Look at this guy. Incredible. CN. What? 110.
Okay, let's see if we can test it.
Interesting spot for the 10-year here as it retests VWAP for the quarter, which line up with swing highs from May and June. Be a fun spot to watch to see if the bulls can maintain the bounce off of the low lows in the 10-year for the year, low of probably multi-year, right? Close to it on a back adjusted basis. Yeah, it's going to be a good inflection. I might give it a little wiggle room, something like 109.20 or something. There's a lot of markets right now that are at some pretty good inflections. Big picture.
We just back tested this last consolidation here and are pushing out from here. And we tested short-term resistance, now support. So if we can wedge up here, then this will stay sideways to higher from here once again. If that is lost, then we can get a move down into 280s, this zone right here. The monthly is a doji on NQ right now. Yeah, it is. I mean, it's just a beautiful weekly consolidation. It's a weekly flag out of that big March, April rally. So this is just a healthy consolidation after a big move. Consolidate a bit more on the daily and then another multi-week move. Hey, you don't have any of that buy the low swing that you do, right? From Friday or Monday or Sunday?
Who, me?
Yeah. Who, me? Just hanging around. Yeah, you.
I was out of the country last week. I didn't pull up a chart the whole week.
Oh, okay. I was gonna text you like, hey, this is that spot to see if you were looking too. But all right. Well, at least you got to you were golfing, right?
In Scotland.
Okay.
Anyone from Scotland in the chat?
Yeah, were you promoting it over there or what? What were you doing?
Promoting it? What do you mean?
Promoting the stream.
Oh, yeah. That was the purpose of the trip.
Okay. Good. Some marketing efforts on your part.
Beautiful country. Incredible time. It was I just can't wait to get back.
All right, we'll pull back into the 25% area of the IB. You know, we are still range bound, meaning that we can reject pretty strongly from here, but the rules are that if we are above the daily 9MA, which we are, I need to engage in longs. So unless something else changes and we lose the daily 9 SMA, I will be taking longs here. We just pull back a little bit more to test the 25% mark, which is currently at 325-ish, 327. So let's see if we pull back here.
Chris, I shot a 77 at Carnoustie, brother.
Oh, is that your handicap?
This conversation is over.
I have a handicap of 6, so
Sure you do.
isn't that handicap is when you miss only 6 trades out of 100?
Like I said, this conversation.
So I have a handicap of 6 because
you're handicapped, all right.
I only make 6 shots. Okay. Guys, just say nonsense when you're tired of hearing him talk, okay? He's gonna be like, what? But that's great though. Congrats. 77. Wow. What a number, huh, guys? I wish I could be up there with the greats. 77. Wow.
It's one of the truest tests in golf.
How handicapped you are?
You got to do better. You got to try harder.
Better than 76. I went to a simulated place. And I'm getting it, all right? I'm getting it. Don't give me a few months. Yeah.
I love it.
I bought my first pair of clubs. I didn't know what to buy. Somebody just said, hey, buy the Costco set. So I bought it, $500.
Oh, the Kirklands.
Yeah. And you know what? Call me What's some good professional golfer's name?
It ain't over yet, McGavin. The way I see it, we've only just begun.
I'm trying to think of a good one for you. The only thing I could think of is you're going to become the new legend of Baguero Vencero.
Call me Tigre Madera.
Oh, that's a good one over there. Simple
Tiger
X.
boxes.
Costco Tiger.
Costco Tiger.
That's a good one.
Enrique Fuller. My name is Jeff.
My name is Jeff.
Okay, so we're not exactly at the 25% mark. I'm hoping we'll make a new low here. But you know what? Seriously, congrats. I do want to learn how to play golf. And I want to get better at it.
Do it.
I got to make more sim visits. But we can make a new low here into the 25% mark. I'll look to engage. As we come down to seek a 15-minute higher low. But if we trigger a reversal from here, I won't be able to engage. Let's see. Oh, there you go. Okay. So I can look to engage now as we come in here. So the next 9 MA lower high, here's the structure that we have. We have a lower low, lower high, and we're making a new low now. So now I need to wait for that low to sort of end and then bounce into the 9 MA to then set up my trigger long, which can fail. You know, we've seen a pretty big 2-day move. Again, it has a 52% win rate. So, you know, guys, you just have to think that every trade is going to be, I think that every trade is going to be a loser. And it helps me because it sets my expectations and I don't get emotionally attached. But for some reason, you know, the gains grow over time. So
A couple questions from folks about golf, analogies to trading. Do I feel it's helped becoming a better trader or vice versa? You are who you are and who you are becoming, both on and off the course, both on and off the trade desk. You don't just compartmentalize your level of discipline or patience or ability to bounce back from adversity or whatever. You don't just like do that in one arena and not in another. So everything crosses over into everything else. You are who you are. And again, you're not just pigeonholed into being something. You can change, right? So look, the guys on the golf course, there's a lot of bad shots in golf. That's part of the game. A lot of misses. It's too demanding of a finite, you know, your club face is open or closed by a few degrees, you know, and you hit a quote unquote bad shot. In trading, you could be following your process and doing everything right, and you could have a losing trade. So I think that's a really, really strong parallel is the guy in the golf course who hits a bad shot, who lets it affect their next shot and next hole and rest of their round or whatever. The trader who gets top ticked or bottom ticked or screwed somehow, or an execution error, or a sequence of 2 losing trades, who then allows that to mess up the rest of their session, degrade their performance, their level of objectivity, everything. Then they carry that into the next day because they want to make it back or whatever. It's a very, very strong parallel. So that's kind of a thought on that question.
Hey, question for you before the guys come. So you know how I'm trading the New York IB and then the Asia IB. Do you happen to know of any sort of data set or something that I can look into to understand what will produce not necessarily better returns, but so here's my question here. I have I'm risking 3% of the account for the New York session, and I'm currently risking 2% of the account for the Asia IB session. But in additional back tests and studies, I saw that if I do 3% and 3%, then it achieves a better return with a smaller drawdown. But is there anything else that I could be considering to help me understand if the equal 3% for both markets makes sense?
So the amount you risk per trade is really just, it's all it is a risk of ruin question, right? It's ultimately, you could run a lower leverage strategy. You could run them both at 1% risk, right? You could run them both at 50% risk. It's a risk of ruin question. It's what kind of drawdown profile do you want to create? The only other thing in terms of sizing between the two, could be, is one just drastically better expectancy than the other, right? If so, you might only trade it, or you might really kind of size it up compared to the other one. Is the other one really worth it if you want to size it down? Those are the things I would think about.
Thanks. Are they playing music?
Music? I don't hear any music.
Oh, I hear music. I thought production was playing piano music. Where's that coming from? Oh my God, I think my dog turned on the TV. I think he was biting on the control. That's funny. Yeah, that's foul. Cool. Thank you for that. They both produce, I mean, the returns from the Asia IB are just phenomenal, almost comparable to the New York one, that I have to trade it.
And are there maybe their drawdowns are at like different times, so it smooths things out?
Yes.
Oh, that's great, man. That's
So
fantastic.
the New York one had a drawdown in May, which I experienced that myself.
Mm-hmm.
I was down 11%. The Asian one had one in February. And then when I sort of did a back test combining both, they sort of leveled each other out. And which is great, right?
Yeah, modern portfolio theory.
Yeah. So, you know, I'm a little bit shocked that it said that in 6 months it achieved 500 or so percent, but you know, I am up 450% just from the New York session alone. So it kind of makes sense. So I'll see how the strategy does into the end of the year, combining both now.
Cool.
Hey, good morning.
Good morning.
Hey, good
What's
morning,
up, fellas?
Merritt, I'm sorry that Chris doesn't know how to talk to you about golf, but I'll give you some flowers for that 77. That's pretty sick, dude.
Thanks, brother.
Listen, if I got 77s in school, that was not be good. Okay, so you can't be that good if you're getting a 77. Come on.
Was that on the front nine or the back nine, Merritt? No, that's good. How long you been playing? What's your best? Are you a driver, or you drive for show, or do you putt for dough?
My best is a 72, and I've been playing since 2020. I'd play a couple times a year before then, like with buddies and stuff. But
oh wow, you've only been playing since 2020, and you're shooting 72s. I'd say that's pretty good.
I think tennis translated a lot. I was a decent tennis player, and I think that translated to.
You really do come across as a country club guy.
I
You
have a
should see
golf
me during
brag.
hunting season. You wouldn't think they would let me in.
I forgot about this. Merritt, on Father's Day weekend, my dad and my brother-in-law, we went and played 36 holes, which is way too many, as an aside. I've never done that before. It was crazy. But I got my first eagle. I holed out from like 180 yards.
Oh, that's sick. Could you see it go in?
No. So it was a total fluke. Like I bladed it. I mean, I hit it way too hard. It was flying, and we just heard it smash the pin. And I assumed it just like it pinged off into the woods, but it must have just like dunked perfectly straight down in the hole. And yeah, first eagle.
That's sick.
So that was
Congrats.
cool. I think I shot like a 110 that day also on that 18. So I'm not a good golfer, but with an eagle.
Pretty sweet. I had an eagle in Scotland at Kingsbarns. It was downwind, and I drove. It was a 336 yard par 4, and I drove the ball to like 3 feet, tapped in for eagle.
Dude, sick. That's incredible.
Yeah, the wind over there is crazy.
That's cool.
You guys in any positions?
Yeah,
I'm long oil right now.
I'm long ES and NQ.
All right, it's doubling up.
Yeah, they're both doing the same thing. I don't know. It's one of those trendy looking days that looks a little too good to be true, but I might as well try to grab it while it's around. I don't know.
Get them while they're hot.
Yeah, pulled back to the overnight high on ES. NQ pulled back to I don't know, VWAP. There was a buyer. It's a good 11 o'clock. We're in a trend day. I don't know. Click the button.
I don't hate it. Cool.
All right,
What you guys?
I caught the low of day, but then when it was like choppy around I don't know, 8:50 Central, I scratched it out right before the big pop.
Yeah. It sucks. I was watching that 75.07 spot, and then also similar spot on NQ, and it hasn't come back to even talk to that breakout at all yet.
Yeah, and there was a mild kind of passive seller right there, kind of absorbing just a little bit, and then yeah, it was kind of a funky end of quarter kind of sequence, I think, which is why I was like, you know what, make it, take it, that'll be good enough. So, well, cool. Good luck, fellas. Chris,
well, thanks, buddies.
Yeah, good sesh.
Go to the sim, Chris. Start dialing in your swing.
Chris, you can't be as bad as me at golf, but if you both want to try to get good, maybe we could combine our powers and try to take Merritt down together if you want to. I'm down.
Yeah, I'm always down to taking them down.
What an idiot.
All right. I got along here with the IB strat. Let's see if it works. You guys have a good sesh.
Let's go, baby.
Thank you. Good luck.
All right. Take care, guys. Have a good week. Bye.
Take care. I forgot it's only Tuesday.
I know. What is up with that? Why does it feel like it's Thursday at least?
I'll tell you why it feels like it's Thursday for me. I have no hot water since last Thursday.
Oh, dude,
So-
Jack, you have some house tragedies that happened to you.
There's something going on, and I have a theory. So in my building, there was these things that we called them the guardian robots. They were like art pieces, and I actually owned one of them. Super cool. And then, of course, you got an HOA, and the guys and the people on the HOA are always like losers. And so the president of the HOA, while I was out of town, somehow ordered, because he thought it was a security hazard, which is like the dumbest thing ever. So threw the ones that are on my floor out. And ever since the guardian robots have been thrown out of my building, it's just been falling apart. And I've gone one up. So I blame everything on him and the yeah, so I just
that's crazy.
Yeah, lightning strike, fire, and people's gas showed up at my house. So like, I have no idea why. I don't even know why they came, and they're like, we got to check for a leak, and then they just shut my gas off. I was like, what? Like, no warning? They're like, yeah, you got to call a plumber. I'm like, okay. And then of course, first quote $4,500. So I'm like, well, better get a second one. And then, they cancel. So then I got, then it's the weekend and I got to wait till Monday. And finally got them booked up for Thursday. But cold showers have been getting me fired up every morning.
Oh God, that's the worst. I'm not a person that can deal with a cold shower. Like, no. I mean, I gave
it, bro. I'm Wim Hofing it.
I tried that dude's breathing stuff for a while, and I was like, man, this doesn't feel very good. I don't want to be in the cold shower. I know people like the cold shower, and it's got its health benefits, but I don't know. I live in the north, dude. It's cold enough 8 months out of the year.
Beyond the ice wall? Are you beyond the ice wall, John Stowe?
I feel like it some days, for sure. I mean, you got ice wall out there too, man.
No,
the Chicago
I do.
Winter sucks too.
Not today, dude. It's like 97. We got heat warnings. There's like grandparents dying out here. It's like Europe.
It's not funny, but it does always crack me up that they're like, old people, make sure don't do anything today.
Yeah, don't do anything, old people. Yeah, I might have to really get some time outside. It is clear blue skies. It's probably one of the hottest, nicest days. Gonna hit a pool.
Yep, same.
Yeah, really a lot more volatility here today. I had some nice moves in the morning. It's the first trade I've taken since for the first half hour. Also had my handy dandy scanner. So I got this scanner. I don't know, you probably weren't watching yesterday, but like this is something I got finished over the weekend, and it had gold being the most bearish market going into the close yesterday. So I got short
that
gold.
Looks good.
And the freaking puke. Yeah. So basically it measures the percentage of the day we've been trending, both on RTH and the full session. So I mean, it's my second day testing it. So yeah, I definitely probably still got to work some bugs out. But I'm liking it so far.
That's cool, man. I like that. I like that UI. It looks good.
Yeah, thank you.
Sure.
But yeah, obviously some nice moves off the open today in all of the indexes, and then copper really busting out here today. So I just try to get long here, but I miss my fill.
Brother, you trade everything.
Dude, Dr. Copper, dude.
Dr. Copper.
Dr. Copper.
There was a time when Jim was saying Dr. Copper every day. Jim and Tracy were looking at Dr. Copper every day. And I'm like, what the hell? I didn't ask for like 2 months. I'm like, why the hell are they calling it Dr. Copper? And I finally asked. Like, because he's the market, he's the doctor. He lets you know how the market's doing.
Yeah, well, lets you know how the economy's doing, I think because
oh yeah, there you go.
Copper is like truly the most industrial metal, whether electricity, piping. Speaking of piping, I got to deal with that.
Yep.
Our gas pipes copper? I'm not sure. Maybe they're steel. I don't know, but mine apparently need to be fixed. But yeah, they're just having all sorts of issues.
We're gonna get to side B on ES. Are they gonna let me have this? Is this like, are they just being nice to me today? I don't know. The market's been a jerk to me for like 6 weeks. Is it done? Maybe it's the caller. Maybe that last caller was a jinx for me, and maybe this one's gonna be the good caller. Hey Tracy, good morning. I'm gonna take another one there. Man, I barely survived that. Let's scale another one here at the. Maybe I'm not. Maybe I'm gonna hold that. So I've got 60% of my position still on ES. If we can get back up here. And then I had the same thing on MNQ. But we're bumping up to the +1 on both of them. Buyers still buying, though.
Buyers be buying.
Buyers be buying.
What do we got? We got News Smart, don't we? Let's see. First of all, last day of the month today. First day of the month. Those are always interesting.
It's the first of the month.
ADP, non-farm employment tomorrow, nothing crazy. And then Chairman Warsh is speaking tomorrow at 9 a.m. I think, is this his first speech since it's like outside of him being on the mic for FOMC the other week?
I don't know. That's a good question.
I think it is, but I'm not sure, of course.
Yeah.
And then we have ISM tomorrow too. So first day of the month, last day of the month, I do think we're going to have some movement. No shortage here. But hello, chat. Good morning. Good morning.
Yeah. Hey, chat.
Jack and Stowe, I appreciate the Develop Your Edge series with Jim. Great perspective. Thanks for sharing. You're welcome.
Oh, sure.
Happy to do it.
I mean, honestly, you know, I don't have the opportunity to talk about that stuff in my normal life because all of my normal human friends almost pass out anytime I mention anything that I mentioned on the Know Your Edge thing. It's like, so the only time we can talk about it is with you guys. You're the only people that don't think we're crazy when we start saying things like VWAP and ROI and ranges and blah, blah, blah. So
somebody needs to make a child. Is there a children's book about trading?
That's
like,
not a bad idea.
You know, like that'd be like a great like gift for like a father, like, you know, on Father's Day that like trades, like read your kid a childhood story about VWAP and little candlestick characters. I mean, that's worth at least $100,000, you know.
That's good. That's good.
Candy the candlestick, you know. Davy the Doji.
Davy the Doji.
Sorry, who's an illustrator here? Besides, I mean, don't tell me Claude, because I'm sure we could get this done with Claude in a week. Where's Nick when you need him? Nick, we got an idea.
Nick,
we're gonna illustrate a children's book about trading with Doji, Dave the Doji.
Nick's fighting with Claude about something else right now. So it's he's working on his own a different problem. He's got a day off today, so he's got to dig into Claude as hard as he possibly can. Poor guy. Why is Daddy crying? That's good.
Oh gosh.
There you go. Let's go. All right, we still got the IB on.
I think we have a group of buyers here. Wow, great pullback there in the Russell and a new bid in the highs. All right.
18.
So yeah, I mean, according to my little trend scan here, since the RTH session, out of the indexes, Russell or ES and NQ are trending the best, according to this.
Yeah, I like when they're all on the same page. This hasn't happened in a while, which is also why I didn't believe it. I was like, there's no way. Like, this is going to fit. I assumed I got into both these trades. I was like, these trades are doomed. This is going to be fine. I'm going to get on stream just in time to get stopped out. But
yeah, you're cooking.
Yeah, I'm cooking.
Yeah, I actually had a beautiful, my entry this morning in the Nasdaqs was 30,001. So I was basically long the low pre-market right before we opened and cashed that puppy out. But
sick.
Yeah, it was nice. It was a trade I was basically looking for that setup since 2:00 the prior day to give you guys an idea of sometimes how patient I am. It was a specific setup I was looking for, and it took till, oh gosh, I don't know how many hours that is. I can't do that math, but like 18 hours or something.
And the secret to Jack's patience, cold showers.
Cold showers. No gas.
No gas.
No gas.
Do you have an electric stove at least?
No.
Oh, God.
And I'm glad I don't have an electric stove. So not only, I also have 3 friends and a dog staying with me in a couple days. And I'm like, I need to do so much laundry. And it's just like, I mean, I guess I can wash clothes cold and like stuff cold. And
nah, it ain't the same.
You know, I mean, it's going to be a shit show. Am I allowed to say that?
Sure. We can curse. As crunchy as a person as I am, I'm not a eco mode clothes wash. I rip that baby hot.
Oh my gosh! If you had to buy one of those eco dryers that they had during the "We Gotta Save the World" movement for the 4 years or whatever it was,
Yeah,
those do not work.
Nope.
They now sell normal dryers and washers, but there was a period where some people decided that we all needed to say, which I understand if you live in Arizona, but I'm telling you what, in Chicago, we got a lot of water. Okay, I got a big lake right there. It's so big. I don't need to be saving any water. But yeah, man, if you're downstream of the Colorado River, good luck. Awesome, Ronald. I'm glad. I was actually surprised that many people didn't actually go ahead and purchase that. Not to like toot my own horn, but I was like, that is such an awesome tool, and I don't really feel like I made it that expensive. But love the feedback, Ronald. Already made a huge difference in your trading. That's freaking awesome. All right, just got filled on my Dr. Copper. Let's see if I can pay for this bill here with this trade.
So remind me, and Tracy, also remind me if you're in here, because you told me this a year ago and I've forgotten it. Why is copper the measure of the economy? What is it about it that makes it the doctor? I don't remember, but now I want to know again. Desalination. That's right. Hey, man, dude. Oh, I got to switch this to... I always forget to switch that to live chat. I miss everything. Copper is everything. That's not an answer, but thank you. Construction, okay, fair enough. Industrial demand, okay, thank you. It's like, sure. Hitman, you're always good. You're always good for a laugh, dude. He's a funny guy. You can't put sriracha on most things. Okay, it is decoupled from its traditional role as Dr. Copper. It's not attached to the AI. Ah, yes. Okay. So AI kind of broke Copper's heart a little bit, took it out of its job because it's not as essential to that industry.
Do we need? Does that mean we have a new doctor?
Yeah. What is this, Dr. Aluminum?
Dr. PVC.
Not a doctor. Shh.
Interesting that it decoupled from the AI CapEx trade. Did they not use copper in pipes or like wiring?
I don't know. Jack, where can people get your ATR tool? I see a question.
Go to my Twitter, and then it's on my Twitter. That's probably the best way to do it.
There you go. You got one of those link trees?
No, I don't, but it's in my tweets. Oh. I think it's like
Jack, get yourself a link tree.
Dude.
It's nice.
I'm afraid of clicking link trees. I'm like, what's here? I'm like, oh, an Amazon wish list? Yeah, okay.
Get yourself an Amazon wish list.
I should. It's just gonna be nothing. It's gonna be like a mouse, which I just bought a new monitor the other day. And
cool.
Yeah, it's gonna be the first time in a long time that I'm actually using a vertical monitor. I just need a little more space with all of these things I've been building.
Oh. Why are you going vertical? Just for fun?
Partially because I already have two 34s that are just take up a lot of space.
Yeah.
Like width. And then so it's a 27-inch and I'm just going vertical. I just don't need the width. I'd rather have like the length, I guess. Is that the proper way to say that? You know what I'm saying? Yeah, I don't need more width. I'm more of a length guy. But Stowe,
Production, if we're still clipping things,
Yeah, I hope not.
please, if you want to get me something for Christmas.
We could really pump up the NinjaTrader Instagram with clips like these. That's all I'm gonna say. I don't know who's in charge of that, but they should come watch this show. Jack Stowe, help your mate comrades. How do you set your profit targets? You know what you should do? Go watch what I talked about for an hour, because I literally talked about it. But I'll tell you again, but I did an hour on it too. Well, not the whole thing, but I use average true range of the 5-minute chart or whatever time frame I'm trading. And I multiply by 150%.
All right, they're still clipping stuff. Cool. It's driving me nuts.
Yeah, there you go. That's a quick clip. That's a controlled C clip.
Yes, I told a pirate dad joke yesterday, and they quickly grabbed it. Apparently,
if I actually think if somebody were to just dedicate their day to just clipping us on NinjaTrader, whoever's on here, they'd probably have a huge following about NinjaTrader on Instagram. For real. Like, I'm talking to dumping 30 clips a day of like whatever is said on here that's meaningful, funny, whatever. Please don't clip me. There we go. But I'm
my profit target stuff starts off automatic based on risk to reward, and then once I'm down to the last 20 to 30% of the position, I kind of actually have more on here as a runner. Then I get a little more discretionary with it. When ES, NQ, and Russell, I assume the Dow is also doing the same thing. When they're all in a trend and it's an uptrend, this is like A++ for me. So I'm going to keep more runner on than usual. And at this point, there's really no upside target. The next thing I'm looking to happen is on NQ, I want to see this IB break. We have this divergence at the moment. I mean, it's not a big divergence, but ES is hanging out in its trendy band, and Q is kind of fighting to get back in its trendy band. So I don't know. I just feel like I have more meat on the bone. So I've got 2 M and Q on still at 100 points and 4. So I've kind of got double the runner size at the moment. Because I'm really looking for this to continue. And the next spot we've already hit all my range extensions too. So if it gets above this, it's party time. Excellent. It's no longer a bogus journey.
And Mia, first target is a third of my position. For me.
Excellent. Swing.
What's that from?
Wayne's World.
Okay, I know a line after that. I'm not going to say it, but we don't have anybody clipping, so there's no point. It's just acquired.
Yeah. We're all good for 90s movies, quotes. We got everything here. Yeah, no problem, Knox. You're welcome.
You're welcome.
No surprise here. NQ stuck at another 420 guy. The conspiracy continues.
Yep.
She don't care. Thank you, Thomas Gaines.
Thomas Gaines, is that a play on Thomas Paines? Okay. I want to see one more test of that low we just came off of, but I don't know if I'll get it in the NDQ. but I'm not going to root against you. You're long NASDAQ, right? Or no?
Both. Yeah, ES
Full
and
port.
NQ.
Full port.
I was like, well, hell, it's setting up over there. My initial thought was like, I mean, I barely escaped this stop out. So what I was doing is I was like, all right, I'm going to scalp NQ because NQ's setup was looking a little better, and then pay for some of this stop out I was about to take. And I did, and then I didn't end up taking it at all. So now they're both in, and I was like, wow, that worked a little too well. The other thing that happens too a lot is these delta flips often get retested, and those end up being good spots. This is like true A++ stuff is a quick stop run of these lows, which we got. This is when I got in, was after that first one, but they almost got me on the second one, but survived. Now we're pushing. And there's really the other thing I look at too is on the delta volume profile, there's really no active selling that exists up here. So either this is the most absorption to ever exist and we're just and we're going to die up here, or this is all just really angry buying with no active selling coming in and hitting any passive bid. There's no red team up here anymore. We're just grinding through passive selling. And when that happens at the top of a trend, you're usually going to see continuation.
Mr. 820, are you still in need of momentum stock skinners? Yes. So I'm really looking forward to them when they actually come out with the futures product, but like I do want to start doing some dev on it now. So yeah, if you were one of the people that responded to me in a Twitter, I guess I should just open my DMs, but then I'm going to get a bunch of scammers from the Indian subcontinent, but I'll just deal with that when the time comes.
Just open them up. Start clicking links. Dude.
I don't even know if they're closed or not, to be honest. If they're closed, I closed them so long ago.
Twitter's DM system is like the whole messaging system is confusing as shit to me. Every time I open, like I'll open it up and all of a sudden I have 20 that I've never seen from like the last 2 months.
Let's see.
And I don't want to be like, I want to write people back and be like, hey.
Chat, who can message you directly? Verified users. Okay, I'll change it to everybody. And then, yeah.
Gregor, my settings for leg-to-leg delta is 10 points for ES and 60 points for NQ.
Yeah, I get enough of those on Instagram. The request for dollars. Like, do I look like Bill Gates?
I don't think so.
No, I don't think so either. I don't want to be associated with him. What else was I going to say? I forgot. Anyway, Australian dollar really on a trend here today.
You gonna get him? I'm watching this this high here. I'll pull the DOM over so you can see the NQ. I have this liquidity stacking above, and just gonna see if it can push over. We get into 11:30, yeah, right now. So we'll see if that pops at the London close. Filled it.
What are your upside targets here? Are you thinking?
I have no idea, frankly.
Just running it.
Yeah, we're above all the stuff, so it's like now I don't have any. I don't even have any. I didn't do my. That's a pretty big offer. I got filled there. We'll see what happens at 408. They sell it from here. That was a pretty active seller. I might get out. But yeah, I don't even have standard deviations this high on my. Oh, nice. Okay. That's cool. So it came down, filled this offer, and then really stacked up behind him. So somebody's really partying up here. 416, or excuse me, this bid was filled, and then 105 stacked up on 416. My next target is 535. That's all I got. Let's see if they fill this 416 guy and what happens there. Because resting liquidity is only useful after the fact, and to see the participants around them.
80/20, I'll take this scanner. Or what platform? Or just send me over the information. We can chat on there. I don't know.
Ooh, another 4. Okay. Okay, he got filled. Tom, what's my target for ES? I also don't really have one. What I probably, nice, that's cool. Looks like they're trying to push out of this thing. What I'll probably do is I'll use, like when I don't have a target for ES, I'll take some off at 75, 50. It's a round number. I take some off at the 50s and the evens. Nice. All right, I'm down to 1 on NQ now. But what I'll probably do is when NQ gets to, if NQ gets to 535, then I'll get out of the ES trade wherever ES happens to be. When they're partying, when they're friends like they are today, I can use the higher conviction levels on one for spots on the other.
Crazy.
You got 65 next target. Fair enough. We got 25 more points today, Hitman. In us? What the hell is today? Tuesday? That's one of the more unlikely trend days. Also, statistically.
Is it? All right.
Yeah.
How does that define trend though?
I believe that stat is derived from the oldie-timey trend definition of hits at least the 50% of the IB.
So that's
extension.
the trend. Oh, the 50% of the, okay, gotcha. So 50%, we rally 50% greater than the initial balance.
Yeah.
That's how they define trend. Interesting.
That's like an old I believe that's an old like classical definition of a trend day is we hit at least 50% extension of the IB in one direction. Then they can check that box. I don't use that, but when we pulled that stat forever ago, I believe that's what we used.
Yeah. I mean, end of the month always, that could be why it's the end of the month. Tomorrow's first day of the month. I notice bigger moves always around end of the month, beginning of the month, reallocations. I guess it's end of the quarter. It's also halfway through the trading year today, right?
Really? That's cool.
I believe so.
Time flies.
Jim sent me an email about it.
Oh, that's true.
It's the NinjaTrader email. If you guys are not signed up for that, sign up for it. I don't know how to sign up for it, but you should be if you're in here. I imagine at some point in time you've given them your email and let's see. Yeah.
See, when Jim sends me emails, I tend not to click those links because I've been burned in the past.
Yeah, that's how you get it's like clicking a LimeWire link basically from like 2004.
There you go. It's called the First Print Newsletter. They work very hard on it, and I don't know if you guys have noticed this, but there are lots of smart people that contribute to this channel that aren't. I mean, I'm not talking about me and Jack personally. I don't put myself in the smart person camp for contributors, but there are people that actually know what they're talking about, and they help write a newsletter that you can get for free 99. You just gotta subscribe. Click that link, baby.
Okay, so we have SciFlow says a true trend day is a 1% move up riding the 21 EMA on the 15-minute. Interesting.
Yeah,
I mean,
everybody's got their
everybody's got their own definition.
Yeah.
That's why I was just curious. I mean, says who? Like I don't know. Did we vote on it? How do we define what a trend day is? I mean, that definitely sounds like a day that's trending.
Yeah. If I had a personal definition, it would be spends most of its time above VWAP, spends a lot of time in the upper standard deviation band, and VWAP slope and the bands spend most of the day at a 45-degree angle. And then into the afternoon, it normally flattens out, closes up there in the higher deviation band.
Hitman Actual, that's the one I would agree with, which is the one time frame up on the 30-minute, which is one time frame up on a 30-minute means not a single 30-minute bar low is taken out. So but that's pretty rare. I actually don't know how rare that is, but I know it's pretty rare. That would not be today. Those are those days where you're just like rocket ship all day. Can't get in. One time framing. One time framing is something I think should be in everybody's toolbook, or at least be aware of it. You can one time frame up on the 30-minute time frame. Another thing people look at is one time framing up on the daily, meaning, every day up. I mean, we've all remember those rallies. Gosh, what month was that? I'm losing track of time, but it was basically the rally out of the beginning of April. Every day up.
Yep.
Up. Just one time framing, or only time framing. I think
it's one.
Is today okay? One time framing.
I don't know. I think Hitman Actual is Jim Dalton's burner. I've had this theory for a long time, and I think Jim Dalton watches this show and also DMs me on Twitter as Hitman Actual.
Simple. You are correct. We actually are OTF on the 30-minute RTH correct currently. So this could be one of those days. We are OTF, one time framing up, meaning no 30-minute low has been taken out in the ES or the NQ. I haven't checked the other markets yet. Is Jim Dalton still alive?
Yes. Yes, he is.
I don't know. Sometimes these guys die and you don't hear
I
about
know. Yeah. Yep. Nah, he's still around. Yes, it would, Hitman. Yes, it would.
You ever seen somebody like pass away on Twitter, in a sense that like you find out they're dead on Twitter?
Yeah, I don't much care for that.
It'll be like, this is Greg's wife tweeting from Greg's account. He passed away last night peacefully in the loving. And you're like, oh my God, like what? Like back in the day, you have to find the obituaries in the newspaper. Now you get them on Twitter.
I actually have it in my will that Nick, Leo, and XY will inherit all of my social media when I'm dead.
Are you serious?
And
that is not in your will.
And their job is to do a certain set of bits and trolls in a row, and they've all signed the contract saying that they will definitely do that. So,
well, they could probably AI a Stowe with all of your video content out there. You ever think about that?
I hope so.
I'm sure they can.
Jack, maybe they already
definitely
did.
Copy your
Am
voice.
I even here right now?
Can they duplicate your personality? I don't think so, but they can copy your voice. They're not going to get it all down, but Mr. Joss Platinum, you should probably keep that to yourself. Don't tell too many people that. Anyway, can we get some pumps on the stream for Stowe's future AI character? So he'll never go away. He'll be.
Well, Nick made me an AI character that's in all of our trailers for our stream stuff, and he's very buff. He's very muscly. He has a chin, well-defined jawline. He's really a better version of me.
So basically, you in real life. They say the camera adds 10 pounds. Though I've seen you in real life. You're much more jacked than you look on camera.
Oh, thanks. Jack's lying, but thank you, Jack. I appreciate that.
Oh,
I gotta fix I'm doing great in the gym, but I gotta fix my sleep, dude. Like I can't figure it out. I sleep like garbage. I always have. And that's the part that always kills me whenever I try to exercise is I always hit this wall where it's like, hey, you're not sleeping. Your recovery is gonna blow. And then
Do you drink a lot of caffeine?
Yeah, but I cut it off at like 4. I mean, it's not a lot. I drink like a couple coffees and God, I am hooked on this Dr. Pepper Zero, though. I tell you, it's my crack. Can't get out of it. It's too good.
Justice Alito is retiring from the Supreme Court, reports NPR.
Interesting. Okay. Yeah, I take magnesium. And I do 45 minutes of zone 2 cardio a day. I know. I'm checking every box. I promise. I am working so hard at it, and it ain't working, man. And no, I'm not going to get a whoop. That's the last thing I need in my life.
Yeah, that's not going to help you sleep.
No, I do not need to know what an app thinks is going on because I'm just going to sit and worry and obsess about that. Those devices are the last thing a person like me needs. Dude, everybody's giving me advice. I'm doing all these things.
Dude, you're going to be taking 6 pills before bed before this chat ends.
Muser Luke, I am crushing the tryptophan. If I could show you my chicken macros, you would freak out. They are great. I'm keeping Costco in business on that organic chicken breast.
Better be.
I almost need an auxiliary freezer at this point. Nope, yeah. No sleep apnea.
Got to read the Doji baby book. Dave the Doji.
I did. Well, we're reading The Hobbit right now.
Henry the Hammer Candle.
You're gonna
get all sorts of them.
Jack, you can write this book with Claude by the time we're done with this show.
I actually think I might. You know, and then I'm gonna self-publish it on Amazon.
Yep.
Kindle, and it will be. And I'm gonna make it free. And then I'm officially gonna have a best-selling trading book, and be like, I'm gonna put it in my bio, best-selling trading book. Now I'm not gonna mention it's a children's trading book because that would ruin my credibility, but.
I like that. That's a good idea.
I think I'm going to do this weekend project. Actually, I'm going to have somebody ghostwrite it.
You could even just put, actually, I should probably do, we should all just put author.
Yeah, no, I'll get you guys all in on it.
Oh, NinjaTrader, thank you. NinjaTrader says chloroform works. I don't know if you could chloroform yourself. I'd probably have to hire somebody to like jump out from behind a door.
I mean,
like every night.
If we're going down that road, Klonopin also works. Oh my gosh. Yeah, NinjaTrader has a stash of chloroform at the office.
Yeah, they got everything.
Need a new mouse? Gotcha. Some chloroform to. It's actually, we call it the chloroform stop loss. When you're trading really poorly and you can't prevent yourself from taking another poor trade, you just do it quick. And chloroform stop loss. Knocks you out for 30 minutes. You wake up, you don't remember what happened. Your memory of all of your bad trades is completely wiped out, and you start the day fresh.
Man, you guys have a lot of advice about how to sleep better. I don't know if I
Sounds
can
like
do all
everyone's
these
got
things at the
sleeping
same.
problems.
Ooh, new high. And Q's trying.
You know, a couple of things though they do say is like not drinking water or eating 3 hours before bed.
Yeah, I'm pretty good with that too. Well, not water.
Okay. Well, still, it sounds like you got it all down, my brother.
That's the problem. Is I should.
The problem is you're doing everything right and it's not working.
Yeah, exactly. Dude, I can't do more than 45 minutes on the incline treadmill. It's just like, I just want to die after just a boredom. I run out of shit to do. I even try to go down there when the show is on, so I have something to do. I can watch the market, watch, like you guys or whoever's on. And yeah, 45 minutes, I'm like, dude, you got to get out of here. This is a nightmare. Still pushing. I like it. No reason for me to get out of this trade. I rarely say that.
Dude, you're doing that. You know what you could do? Back to what everyone was talking, the OTF trail. So if we are one time framing up, just 30-minute bar trail all day.
It's true.
I mean, that's 30-minute bar trail. That if it is a true trend day like that, I mean, 30-minute bar is pretty far away right now, but this one will keep it tight. This open of this or the final close of this bar, I imagine, will really allow you to, going into when we get off here. Ooh, the abandoned baby candle. The abandoned baby candle. We can go really far with that one. That one's gonna be one left at the fire station. The abandoned baby candle is gonna be left at the fire station. That's great. This idea is getting better and better.
Sci-flow, I get sun too. On purpose. Can't you tell how tan I am?
No.
No, it's and Savannah can attest to this. Some people live in a world where our skin is either white or, hey, you just got sunburned, and there's really no in between. You just go from pink to pale, back to pink, back to pale.
Are you Irish?
Swedish primarily, but yeah,
okay.
I'm all the European stuff.
Gotcha.
Just all the white things over there.
Wait, is Stowe your last name? I don't even know.
Is it?
I
Jack's trying to dox me in real life. Delete this.
Don't look him up.
Patrick Stowe. That's me. No, my sister got big into the genealogy stuff, and she went like total nerd autist on it because we all got the rainbow, and yeah, that's what she found.
What do you mean you got the rainbow?
The spectrum.
Oh, gotcha. I just wasn't sure.
We're doing the SpongeBob meme in real life. Thank you, Catnip.
This is Stowe's just a stage name for it. It's also in his, what did you call it? The link
tree.
Link tree. You should check out Stowe's link. Stowe's stage names in his link tree.
Yeah, Jeff says I should come up with a stage name, and I never got into the punk names. That's a thing that happened in punk rock, and like you either made one of those when you were a kid or you didn't, and I didn't. And you can't make a punk name later in life, or you're a dork. So, and I promise that. So no punk name for me.
What if somebody comes up with it for you?
Even worse.
And it's just really fitting. Even worse.
Yep, that's the one, Carly. Magnesium L-threonate. I think I just worry too much, frankly. That's it. It's always been a thing. I'm also in my psychology class, we went over this in the sleep section, and it was like some people are genetically predisposed to be night owls, and that's always been the truth for me. Ever since I was like, I don't know, 10, I just stayed up until midnight, 1 o'clock in the morning, even when I tried not to. Apparently you can change that, but I have not yet been able to do so. But that's when I feel good. That's also when I get a bunch of like good deep work done, is at night. But thank you for all the advice. It was very kind. Hit the likes if you would like me to sleep better.
Oh man, I'm gonna get my burner for this one. See, how many hours of sleep are you getting a night? Are you a 6-hour kind of guy?
Dude, I mean, Sunday to Monday is 3. Like it's
God.
It sucks. Yeah, it's been a rough couple weeks. I really can't figure out why. I did okay last night. I got closer to 6, maybe like 5.5.
Oh.
But that ain't good when you're lifting and
No.
doing a bunch of zone 2 cardio at the same time. I wonder if it has something to do with my dietary change, because I really have changed the way that I eat, like very drastically. But I'm proud of it. I haven't like eaten food in the world in 5 weeks. It's such a game changer when you're like making your own food every day and you see what's in it and making whole foods on purpose. I'm very annoyed I didn't start to do this earlier, because I have noticed a really good difference. I just have more energy all the time. Maybe that's why I can't sleep.
Hey guys.
Jim, welcome to Stowe's Sleep Advice Hour. How are you?
Well, I heard a lot of the conversation, and I'm sorry for your troubles.
It's fine. I'm doing good. I just don't know what the hell is going on.
Well, you exercise regularly.
Yes.
And you're not drinking.
Correct.
Those are 2 pro sleep things.
I know. It's starting to make me feel like even though I'm doing all the pro sleep things and they're not working, maybe all these pro sleep things are full of shit.
Yeah, maybe you should do anti-sleep things. Maybe you should start drinking.
I should inverse it.
What time do you eat dinner?
8, 7:30 or 8.
That's kind of late.
Yeah, that is
dude,
really late. Oh my
I got a
God.
6-year-old. I got a lot of stuff going on.
Now, when you're 62, you're going to eat at 4:35.
Well, yeah, it's a blue plate special. I ain't there yet.
You don't eat at the same time as your kid?
Sometimes, but like, not. I mean, she's really picky. She normally has her own stuff. She, you know, like
Yeah,
I can't.
no, I mean, same
I
with
can't
mine.
eat a hot dog. I can't eat chicken nuggets. So I got to make 2 separate things.
Yeah, gotcha.
I'll give you a remedy, like in the green room after the show. Now,
All right, that's a secret alpha. That's what we get.
It's called a
Fine.
gintini. Okay, I'll tell you what it is right now.
No. All right, you guys got some positions cooking here. Stowe, let's start with you. What's your strategy here?
Yeah, I'm probably just gonna hold it. No reason not to. I can trail my stop, I suppose, below
Thank you.
that.
Appreciate that.
Sure, you're welcome. I knew you were gonna be like, "Hey, Stowe, you got a lot of 22 points, dude."
You'll sleep better if you move your stop to above your entry.
Yeah, I'm just gonna trail this. I'm gonna go party in the gym, see what I can do, and see where it's at after that.
Awesome. We talked. Jack's got. I like the copper trade. We talked about it this morning on the Edge report. Copper is starting to get a little bit of mind of its own, although super highly correlated with the NASDAQ these days. But I like the factor along there, and also gold, right?
Yep. Obviously, a little bit of correlation. Just pull my stop up. Gold reacting better out of this low. I have like one last hope of support at 6.24 area, and really anything below that, I just gonna have to wait for a different entry. But it's had a pretty good run here today. It is going to be a market I'm probably going to be watching for the remainder of the week. I think we've really started building some solid structure of higher highs and higher lows in copper, and that may have been a little bit of a capitulation last night in the Asia session there in gold as well. We kind of puked out and had a pretty hard reversal out of taking out of last week's lows.
Yeah.
So it's going to be something I'm paying attention to. If we can start peeking back through what was Friday's high this week in gold, I'm thinking this daily chart might really just be putting in a bottom near this 39 4K level. Maybe that's as low as we're going to get, because we're starting to lose the selling momentum. And I really think you saw that last night with just that puke down failure to get lower. But, we do need to see some continuation up.
Got it. I love the ATR bars. I haven't added it yet, but I'm definitely going to add that to my setup.
Awesome. Love to hear that.
Yep. I do want to remind everybody also before we cut here, tomorrow is Wednesday. 1 o'clock p.m., 1 to 2 o'clock p.m. East Coast time. We have a special guest, Larry Williams, the one and only, is going to join us on NinjaTrader Live. We have a whole presentation. We're going to talk about what Larry, and we are going to take questions at the end. So if you get a chance to pop into the chat, it'll be great. I'm looking forward to that tomorrow for sure. Let's give these guys a round of applause for a job well done. Very, very awesome. And this afternoon, by the way, we have, check this out, Tanya, Kane, Leo, and Selma.
Whoa.
Yeah.
Quad box.
Yeah. What'd you call it?
Quad box.
Quad box.
Like on Red Zone.
Oh, there you go. All right. There we have it. It's going to be a lot of fun. So we expect some movement today, and it should be fun. So hopefully we'll see a regular 2 o'clock start with Shai in the afternoon update, and then we'll get into things. Having said that, we're going to do a quick Edge report to end the stream. I appreciate you two guys as usual, and I will talk to you soon.
You too, brother.
Thanks, Jim. Take care, chat. Later.
Bye, buddy.
Peace.
Oh, hang on, everybody. All right, we're ready to go. So let's just take a peek at the E-mini S&P 10-minute chart. And yeah, double distribution, triple distribution. Volume profile is really, really wonky. And, we have a lot of reasons for that. Remember last day of the half. This is the end, man. They're about to blow the whistle. And then it'll be halftime, and then it'll be third quarter tomorrow. So there are some weird stuff going on with rotations and portfolio allocations and all that stuff, which Craig, Anthony, and Tracy discussed this morning. But let's take a look anyway. We have a nice rally. We have a single break above the initial balance here, and that initial balance high is that white line right there, 75.33-ish. And we have a breakout to the upside. Now, I added a second standard deviation band around the session VWAP just because we've been trading between the second standard deviation band and the first standard deviation band. Stowe will be very proud of me that I did that. And it's a nice channel upward. It's really kind of helped me focus on what's happening here because this grind up is a little bit slow. We broke through that 0 DTE call resistance at 75.25. We traded through it for a long period of time, but then we had this confirmation candle right here that we're good, we're clear, we're good to go. That was 11.10 to 11.20. It's a little baby candle, but we didn't have a seller. So then, boom, we took off again off of R1, broke that IB again, and drove up to call resistance. Now, the interesting thing is we're only at 67% of the 34-day average range, which is 98 points, by the way. So I did a measurement low to high. I'm like, all right, where's that at? And I put a line up on my chart. That's in 75.80. Now, an average range is average, which means some days are bigger and some days are smaller, right? So it doesn't have to get to the average all the time, but it puts this move in perspective. So what do we have in our way before we get up to 75.80 half? Well, we have call resistance at 75, and that is at 75.50. We're almost there. Then we have mental cues 1-day max, and that's up at let me give you the exact number here. 75.68 half. R2 above that, 75.72 half, and then we have 75.80 spot 5 as what would be the average range if we get there. So again, though, the chart could be deceiving sometimes, especially when you do stuff like move your axis up and down. It kind of visually kind of looks a little different. So by doing the measurements, you can kind of think of it better that way, and that's how I like to think of it. So again, it seems like we're trickling up here, guys. That call resistance is going to be a big deal. And so then we off to the races. Maybe we're going to make some new highs on the session here, continuing forward. All right. Having said all that, I appreciate everybody being part of NinjaTrader Live. Thank you for being with us. We had a great morning. We're going to have a fantastic afternoon as well. Really looking forward to it. Remember, short week. Friday is a holiday. It's 4th of July celebration. It's usually the 3rd, but it's an off day, so there'll be no stream, and markets close early. I think that day you probably want to stay away. So that's Friday. So a couple more days still. We're still going to finish strong. Appreciate everybody being here, and we look forward to seeing you this afternoon. In the meantime, have a nice, relaxing lunch.